Yo, what is up for you guys on the YouTube replay? I hope you were having a great Wednesday. The Jerome Powell meeting today was a bit volatile. Let me give you a quick portfolio update. Then we'll get into some of the stocks that I think are at pretty good valuations right now that I'm about to pick up. But here is a quick portfolio update. Our main account was down 1% on the day. So we actually did underperform the market by quite a bit. The SPY was barely down. The S&P 500 was only down by 0.04, but we're down by 1% on the day. Yeah, all of our top, only McDonald's was green on the day. So, that's why I own them. They're a nice defense name. Here's us year to date as well. We're up 14% year to date. We also have a Roth IRA, and our Roth IRA was green on the day. It was another mixed bag. Hey, what up, Jello? And then here is everyone's favorite, my Webull portfolio. So this is like my growthy portfolio. All the stocks in here are like really risky. Especially right now, it's valuations. Like I wouldn't pay a lot of these stocks current valuations. Like I wouldn't touch them at this price. But here are the stocks that I own in here. I got Reddit, Robinhood, SoFi, Disney, AMD, Supermicro, T-Mobile, Progressive. So yeah, a lot of winners, and I got some big losers in here as well. Like ChargePoint is another stock I lost a lot of money on, but you can't see it in here. And then finally, we have my buy and hold portfolio. So once I buy a stock in here, I legit just try and hold it forever. I try and just buy it and then never sell it. And in the day, we were down 0.6%. Our largest holding in here is now Comfort Systems. This company has just been an absolute monster performer. So how many portfolios do you have? Yeah, exactly. So technically, when you include all these, if you include this Robinhood account, my main taxable account, and the Roth IRA, I technically have 4 different accounts. So yeah, probably more than I should. But anyway, I have a goal with each different portfolio. So this account right here is my dividend growth portfolio. Every stock in here pays a dividend. You've probably heard of a lot of these before. I just got my dividends from McDonald's. You know what? Let me share with you that. If anyone wants to see, check this out. Yeah, I just got a $26 dividend from McDonald's. Main Street Capital paid me $1.80. Google paid me $4. This was all September 15th. So I got a few payments the past couple days. But yeah, here's our total percent change on every stock. Luckily, we are green on every stock in here. So yeah. This is my dividend growth portfolio. This is my buy and hold portfolio. If you look in the top left, once I buy a stock in here, I try and just hold it, never sell it. And then this one is my risk on account. And it's up 16% all time, that account. And then this has been our incredible performing portfolio. Year to date, we're up 55%. But if we go to all time, we are up 130% all time. So we've done pretty good in here, mainly thanks to, Comfort Systems, Powell Industries, and Amphenol Group with some crazy performers. Thoughts on Moomoo? Hey, what up, Packin? Are you talking about the stock or the app? Because I love the app. So yeah, why not buy Singapore dividend stocks? No tax on the dividends. Well, actually, here's the thing that Louise, here's a cool little fact. So check this out right here. Like McDonald's, I just received $26 in dividends from McDonald's. And this is in my taxable account. And guess what? Those $26 I received from McDonald's were completely tax-free, even though it's in my taxable account. And that's because McDonald's pays a qualified paying dividend, which means it's taxed at long-term capital gains. And long-term capital gains for me, since I make minimum wage, since I make under 50K, it's taxed at 0%. So taxes really favor investors, especially the lower income. You legit pay no taxes, even in a taxable account on dividends. And if you sell a stock that you've held for over a year. Yo, what up, Joel? German, what's up, man? Been waiting the whole day for your stream. Hey, I appreciate you, man. Hope you're having a great Wednesday. So do you use margin? No, I've actually never taken out a single dollar of margin ever. I have the ability to take out 11,000, but I will never do that. So yeah, I don't like to borrow money to buy stocks. So yeah. All right, so Wasinator, good to see you, dude. It's been a minute. He said, I want to hear your thoughts on WOLF, Wolfspeed. So this company is like a huge warning, in my opinion. Not financial advice, but please don't touch this company. And here's why. Here's what I like to do. I like to show you the numbers for yourself, and then you can draw your own conclusion. As you know, I'm a financial investor. I like looking at the numbers, and I'm going to just show you the numbers that concern me. So if you look in the top right, the market cap, this whole company is worth $425 million. So kind of remember that number. The whole entire company is worth $420 million, and the business lost $670 million in net income this quarter. 300 mil last quarter, 400 mil the last quarter, and then another 300 mil. Like, they are burning through net income. Like, this company, the reason they're at an all-time low is, in my opinion, because they have a real high chance of bankruptcy. Like, these net income losses scare me. They now have more liabilities than they have assets. You know, every financial metric is trending in the wrong direction. Like they lost $700 million all for a business that declined. Like the organic revenue is down 2% year over year. So in my opinion, I don't see any value in this stock besides maybe a swing trade, like a very volatile stock that you could maybe swing trade, but I would not trust that one. Yeah. Hey, what up, Nicola? What's up? Not the stock, hopefully, but let's look at Amazon. Yo, I do own Amazon in this account. So yeah. Ooh, and then we can look at Uber and Robinhood. Yo, remind me to look at those. I'd love to. So I do own this stock. I might be biased. I really believe this is a stock you should just buy and never sell. Like literally just buy and forget it. Their most valuable business, a lot of people don't know this, but Amazon's most valuable business is actually their AWS, Amazon Web Services business. They're the #1 cloud service provider by market share. It's legit over $100 billion of annual revenue for them. It's their highest margin business because, they're not making too much money on the same day, one-day delivery packages. That's very low single-digit margin, but the AWS cloud business is really high margin. And check out the sales. Law of large numbers, it's hard to grow this, but the revenue's up 13. But check this out. Revenue's up 13, but profits are up by 34. Incredible. So that means they're expanding margins. They now have over 10% margins, just growing the margin every quarter. It used to be a tough buy. They were a negative margin business, single digit margin business, but now they've dramatically improved the fundamentals, which I love about them. Deleveraging the balance sheet, liabilities went from 57% of the assets to only 51. So yeah. What app you use? Oh yeah, hey, if you want to get this app I'm on, it's in the link tree in my bio, the first link there. It's actually a brokerage, like where you buy stocks on. So yeah, what do you think of the Fed meeting? Hey, it was actually it went as expected in my opinion. That's why the S&P ended up just flat today. Like the S&P 500 after all that volatility was like down 0.02 or something. Or I'll check real quick. Yeah, here's the SPY. The SPY is only down 0.05. So it's a flat day. So let's see. Ooh, IPO StubHub. What's the ticker symbol for that one? I saw some people saying that one, and I've never looked at it yet. So let me check this stock out right here. Okay. This right here is one of my favorite insurance companies. The market is pretty much at an all-time high. Market's at all-time highs, but this stock is still significantly off all-time highs, which is pretty cool. So I think it's a stock that, you can actually reasonably buy at today's valuations. And, I'm not just buying them because they're off all-time highs. I'm buying them because they're a good company with good financials that trades at a 13 PE. They're a huge insurance play. Their personal lines are 81% of the business. And check this out. It just hits a new record every year, every quarter. I mean, if we go to this on a quarterly basis, it's up 23%. Like, look at these year-over-year growth rates in the middle. There's no negative quarter. So the business is booming right now, and not just the revenue that's growing on Progressive Corp, but also, because if you look at the revenue's up 21%, S&P 500 company, but they're also super profitable, making $2 to $3 billion a quarter, and it's super growthy. Like the net income's up 117% year over year to $3 billion. They also do special dividends. Like most companies normally just pay you a dividend every quarter, like this. 10 cents, 10 cents, 10 cents. But this company does a unique thing where every January they do a special dividend depending on how good the business does. If we look at last year or this year, it was $4.50. If we look at last year, it was 75 cents. So the special dividend went from 75 to $4.50. And I think with this new legit record net income quarter, I think the special dividend could be a record next January. So you kind of get rewarded for holding. So yeah. Hey, maybe a good time to buy Realty Income. Yo, Realty Income is one of those nice monthly paying dividend stocks. As we go into a lower interest rate environment, you're not going to be able to get those high yields on money market funds anymore. So we might see a rotation of money from the money market funds that are now yielding way lower into the REITs, like the Realty Income. Oh yeah, I forgot to get to this stock. Let's pull up ticker symbol HOOD, Robinhood right here. I do have an account with them, so I've probably given them a lot of transaction fees and stuff. I have my Roth IRA with Robinhood as well. So let's see how the stock's doing. Let me say, this stock deserves to be at over 100 a share. They just got added into the S&P 500. That's why they gapped up right here. So if you're wondering what happened on that day, it was they got added into the S&P 500. So now every month when, Americans put money aside to retire every month, all that goes into the S&P 500, and a little bit of that money will now go into Robinhood. So they just get a lot of passive flows, passive buying. But check out the growth. They're a good fundamental company that the revenue's super growthy. Revenue's up 45 after going 40, after going 50. So Growth is super good. Added is 989 million of revenue. Legit 390 million of it was after tax net income. The net margin was a 40%. They legit print money, making a couple hundred mil of after tax net income a quarter. The analysts are expecting them to continue to grow. They continuously beat on analyst expectations. They had a huge beat this quarter. So Robinhood, I do own them, by the way. They're actually my best performing stock, but yeah, I do like them. So yeah. What up, D Moore? He said, what's your fundamentals on him? So yeah, this company is going through there's some good news and bad news. So one thing around this stock, one thing that led to a lot of their sales growth, they're extremely growthy on the sales. If we go right here, this is why I like Hims, and they're not just some meme company. They have good financials. But one thing that led to a lot of this growth was the fact that they sold a weight loss prescription on their website. Well, now they used to sell Ozempic, if anyone's heard of that before, but they now no longer sell Ozempic on their website. NVO abruptly ended the partnership, and that is going to hinder future growth. So that's one thing I think is being priced into the stock right now. That's probably why they're not at all-time highs, because that is going to hurt their future growth. But I heard that they're doing some new partnership with another company to try and bring back some other. They launched testosterone treatment. So anyway, let me pull up their financials right here. For right now, the business is booming. The revenue's up 72%, incredible. And they made 50 mil, or they're making 40 to 50 mil in net income a quarter. It's just going to continue to climb up higher. Their assets went up with their liabilities after they issued $1 billion of debt for $1 billion of cash. Like, look at their cash. It went from 300 mil to 1.4 billion. That's explained from the debt they just issued. So it really was no biggie. But anyway, yeah, I like the fact that they're profitable every quarter. They're really growthy. We're just watching what the growth rate is after they lost that partnership, and it could potentially bring it back. Overall, I do like that one. Hey, Marcel, thanks, man. He said, I wanted to say thank you for doing these. Hey, I appreciate you, man. Yeah, if y'all want to support me, best way to support me is hit the like button on the stream. I'd appreciate that. Okay. So what happens is, hey, if you want to get this app I'm on, it's in the link tree in my bio, the first link there. It's actually a brokerage. It's like where you buy stocks on. So yeah, let's look at Innodata right here. Yeah, hey, great question here, Joel. What's a good price to buy Innodata at? Well, not its current price. Honestly, like under $60. Like it needs to fall at least 10% from where it is today to like honestly put any money in this stock. So yeah, Innodata is one of the companies I bought my Roth IRA. Again, my Roth IRA is only $2,000. I'm trying to make this a growth oriented Roth IRA. So I bought some Innodata shares. This one's been an incredible performer. We're now up 99% on them. So I certainly wouldn't touch it at this price. But let me tell you why Innodata deserves to be at all-time highs pretty much. I mean, they're incredibly growthy. If you look at their revenue, their digital data solutions are a data labeling company like Scale AI. The revenue's up 99% year over year after going 92. Like the growth, it just hits a record every quarter. So the sales are growing like crazy, and the analysts are expecting the sales to continue to keep on hitting a new record. Like it was a record this quarter, 58 mil, but then it's going to be 71 million in 2 quarters. Also, this company is profitable. They're making net income every single quarter. Incredible balance sheet as well. They're making net income every quarter. They're making free cash flow every quarter. And again, as much as I love this stock, I wouldn't put a meaningful amount of money in this one. But I really think there could be some more upside here. They're only a $2 billion market cap. So that's a very small market cap. Do beware. But that's also a good thing. It's not like NVIDIA, where NVIDIA is worth $4 trillion. For you to double your money, they have to go to $8 trillion. Well, that company is kind of easier. So, hey, what's up, Catherine? What up, Chai? Yeah, we just looked at Amazon, so we're going to have to wait a minute. I do apologize. This 10-day rally on Innodata has been accompanied with major increase in volume. Yeah, dude, I actually can't believe this came out of nowhere. Yo, you got to be up 30% or something, Jeff Mack, right? You got to be up good on your position. So yeah, look at these green candlesticks. I mean, that's nuts. They just have been up for, and the volume. Look at the green volume candles as well. I mean, it looks great. Anyway, let's keep going here. Go back. I need that one. Hey, I don't know what I was talking about. Hey, yeah, if you missed anything, I'm also streaming on YouTube. So my YouTube channel is called Nathan Robert. You can just type that into YouTube. It's also in the link tree in my bio, but you can just type into YouTube Nathan Robert. I'm streaming on there, and you can replay it and rewind it. Up 52%. Nice, Jeff Mack. That's insane. Hey, what up, Celebrate? So he said check out GRRR in their recent news today. Let's see. Gorilla signs 1.4 billion contract with Freyr Singapore to build Southeast Asia's AI denisator backbone. Well, hey, that's got to be good news. Stock is up 13% on the day. How much are they worth? Wow, so they're only worth $400 million. So that's an extremely small company. Do they have revenue? So the revenue is 21 mil. The net income looks, or actually, Yeah, the net income looks a bit choppy. The balance sheet is getting better though. That's great news. I'd be careful with this one, especially after today's rally. I do like the revenue growth. Like so far, this is great. If they can continue this revenue, that'd be great. Revenue's up 76%. Um, and I guess the revenue is expected to continue to grow. Look at that. It's supposed to be 33 million. Maybe they'll beat on expectations. I'd still be careful with this name. Again, they're only worth $450 million, but that $1.4 billion contract, can't be bad news. Hey. So C's, what's up, dude? He said, check out Nebius and their new contract for Microsoft. Yeah, so actually, if we go over here to the NVIDIA portfolio right here, because NVIDIA is so big, they own some individual stocks. One they own is Nebius right here. So this stock is pretty much at an all-time high. And again, just because NVIDIA owns it doesn't mean you should. Go do your own little analysis on them. And, when I do my analysis on this stock, I'm seeing great things. Like, look at the revenue growth or the revenue. It went from 14 mil to 105 mil year over year. A 7x increase. That's insane. And, this was a record. 105 mil this quarter. The analysts are expecting it to continue to climb higher, 260 million in 2 quarters. So the revenue is just insanely growthy. Half the revenue comes from the US, but yeah, they basically just got a huge, if I go to the AI news down here, Nebius secures 17 to $19 billion Microsoft Azure deal. Anyway, yeah, there was a huge Microsoft deal with Nebius, and that's why they had that recent gap up. So pretty cool. Oh, what up? Javone said PayPal stock. Let's do it. PYPL. They own Venmo, they own Honey, and they own PayPal. So check this out. The stock has not done too well, unfortunately. PayPal is the same price that it was back in 2017. But there is one thing that I really like about PayPal that I think will surprise you guys. Here's their total payment volume. What's it at now? Near 500 bill. But anyway, check this out. Here's one thing I think investors don't love. What's this app I'm using? Yeah, hey, if you want to get this app I'm on, I'm actually on a brokerage where you buy stocks. It's in the link tree in my bio, the first link there if you want to get this app. It's a brokerage. Anyway, if we look at the revenue, it's a bit disappointing. Like the revenue is only up 5% year over year. Like that just barely beats inflation, So revenue's up 5, but here's the good news. They're making a lot of money. They're easily making over $1 billion of net income every quarter. And what is PayPal doing with that $1 billion in net income a quarter right now since they don't pay a dividend? Well, they're just deploying it all in share buybacks. Here's the part that I'm trying to here's the main point. If we look at the net income is up 11, but the net income per share is up by 19. You literally own 8% more of the company than you did a year ago. They have bought back 8% of the float. Like, that's ridiculous. They're a huge buyback play. They know the stock's undervalued, so they're just buying back their own shares. Again, we want to see the growth come back. Like, revenue's only up 5, but they are making some nice net income and share buybacks. How do you pick your stock that you buy, and what are your tips on buying stocks? Yeah, hey, basically what I've been doing this whole time, Joel, like if you analyze any of the companies I own, like look at their financials. Like I will buy a company if they have good financials and I can trust them. Again, hey, people are asking, what are you using? Yeah, hey, again, if you want to get this little software I'm on, it's a brokerage where you buy stocks on. It's my favorite one. It's free. It's in the link tree in my bio, the very first link there. It is an affiliate link too, full disclosure. But or you can just type it into Google. It's just a broker called Moomoo. So anyway, let's look at this next stock here. Josh, what's up? LLIMN. Hey, do you mean LUMN? I'm not sure if LIMN is one. Hey, try not to spam there, dude. You know what? Yeah, we can look at Target. Yeah, I'm not finding that stock. So let's look at Target right here. Yeah, what up, Global? So here's Target stock. This company is near not all-time low, but a multi-year low. Target's the same price that it was back in 2017. But here's what I like about Target. It's the fact that you get a sustainable yield. Hey, what's the ticker symbol for Union? If you got a stock you want me to look at, let me know what the ticker symbol. Yeah, I like this one for the yield. You get an over 5% dividend, and the payout ratio to the right of that is only 50%. And here's how we can go verify that ourselves. If you're ever wondering, how do you do a dividend payout ratio? Well, here's how. Oh, and also, one reason I think if we look at Target versus Walmart or Costco stock, one reason Target has been hurt so much compared to all their peers is because Target sells more discretionary stuff. Like only 22% of the revenue is food and beverage, when it's way more at Costco and Walmart. But yeah, then they're in household essentials, apparel, accessories, home furniture, decorations, hard lines, beauty products. That's what most people are buying at Target. And unfortunately, the consumer discretionary stuff has been really getting hurt right now. And if we look at the revenue, the revenue is also negative year over year. The revenue's down 1% year over year. Net income's down by 21, which means they're losing margins. But here's so you can tell if they have a safe dividend, and they do have a safe dividend, and that's the real value I see in Target, that 5% yield. But check this out. They made $935 million in net income this quarter. You go to the cash flow statement to see how much the dividend costs, and the dividend only costs $509 million a quarter. So they actually have room to raise their dividend, which is pretty cool. But we do want to see the growth come back to the revenue, because you don't want to buy a business that's just going to decline in revenue for the rest of the time. Maybe, I heard someone say like Target could be the next Sears, and I hope that's not true. Okay, CMG is the bottom end. I sure hope so. So one thing I will say about Chipotle stock is that it could potentially go lower, and I'll just show you what I mean here. So one reason I think they could go lower is if we look at their valuation right now, that's the PE, which is the net income multiple. They're trading at 35 times net income. The industry average is 27. So they are trading at a high industry average multiple. And that's okay if you have a high multiple, as long as you're high growth, but they unfortunately are missing on their growth expectations. And that's why I think the stock has plummeted. And there's a small chance it could go lower, because still, what was their net income multiple again? They're trading at 35 times net income. It maybe could go down to like 30. But here's the one thing I'm a little concerned about. If we go to the revenue right here, the orange lines what the analysts expected, Chipotle missed on the revenue expectations. Again, high multiple company missing on their growth. That's not great. If you look at the revenue is only up 3. That barely beats inflation. Revenue's up 3 and the net income's actually down by 4. So that means their margins are falling as well. Input costs, kind of normal for the industry right now. But that's why Chipotle is struggling, and we really want to see that start to reverse direction. Maybe in the lower rate environment it will, but okay, let's see here. Micron stock. And also what app is this? Yeah, hey, again, this is a brokerage. It's where you buy stocks on. If you want to get this app I'm on, it's in the link tree in my bio, the very first link there. I love it. It's my favorite one. I have Robinhood as well, and Webull. Like, I have these other brokerages where you can buy stocks on, but there's Robinhood as well. Robinhood is good, but it has no real tools and useful features, kind of like how this brokerage does. Moomoo, it's my favorite one. So yeah, link tree in bio, first link there. I also have these other ones. If you wanted to get Robinhood, I also have that one linked up there as well. Full disclosure, it is an affiliate link, so we'll both get a little fractional share of Nvidia or something. So anyway, here's Micron Technology. This stock is at an all-time high. So congrats if you own this company. They're one of the cheaper semiconductor plays out there. If you look in the top right, this market cap, they're a $179 billion company. So that's a pretty massive market cap. But yeah, check out this PE right here. They're trading at 28 times net income. For this industry, compare that to Nvidia, AMD, Broadcom. They're pretty, fairly priced for the industry. And they're also, they're not trading at a low multiple because they're not as growthy. Like if you go to their computer networking revenue, it's extremely growthy. The revenue is up 97% year over year. Or let me just go to their total revenue. So revenue is up 36% year over year after growing 81%. If you go to their net income, they basically just now got profitable. Yeah, so they're printing money now. What's the margins? 20% plus margins, margin expansion, making $1 to $2 billion net income every quarter, and it's just going to continue to grow. So Micron also has a nice yield, a 0.3% yield that the payout ratio is low on. So yeah, congrats if you own them. They're like a smaller Nvidia. I give Chipotle a lot of business. Hey, nice, Jeff Mack. What are your thoughts on quantum? None of the quantum stocks seem like safe investments, just in my opinion, like Qubits. This one's at all-time highs today. Yeah, look at that. So I've been saying from basically all my life that this is a terrible stock, yet it just continues to keep on hitting new all-time highs. That the momentum is just crazy right now. But I just I'll give you a quick reason for this stock right here. I'll tell you why I couldn't pay this company's valuation. They trade at a $7.7 billion market cap. It's a $7.7 billion company. The revenue was $3 million this quarter, and they lost $170 million net income. I'd just be careful with the quantum names. If I had to get quantum, though, I'd pick Google, IBM, or Honeywell. They have the money and the talent to be the industry leaders. Hey, what up, Jose? What's up, dude? He said Shopify stock. You know who owns Shopify? That's actually in the Cathie Wood portfolio, who honestly isn't really too respected anymore. Her ETFs have done terrible versus the S&P 500. But anyway, here's Shopify. This company is a phenomenal growth stock, and I regret not owning this one. If we just go to their revenue right here, This is impressive. Like if we go to 2019, the revenue was 1.58 billion. Ever since then, it just grows. Like these growth rates on the right are insane. It just hits a new record every year, every quarter. And it's not just the revenue that's growing. Yeah, look at the revenue expectations. It's expected to keep on climbing up, but not just the revenue, but the profits. Like that's what FCF stands for. It stands for free cash flow. They're making a good amount of free cash flow every quarter, 400 to 600 mil. They're making net income every single quarter, a couple hundred mil as well. So anyway, they also have a great balance sheet. Oh, I didn't show it, but Shopify has a phenomenal balance sheet. No debt company. Pretty insane. Hey, what up, yo? Let's see here. B Mills, he said, can we look at ticker symbol cake? Has anyone heard of the Cheesecake Factory? They have a really big menu. I recently tried their cucumber lime lemonade and it was delicious. But anyway, here's Cheesecake Factory. This is a very small company, actually extremely small. They're 1/100th the size of McDonald's. They're worth $2.7 billion. So pretty small company. Yeah, 71% of the revenue comes from the Cheesecake Factory. They own North Italia. How's that doing? Hey, it's up 20% year over year to a new record. Wow, North Italia is booming. I've actually never been there. Never even heard of it, but it's growing. And also, actually, the revenue's up 5% year over year, not bad, but they're really net income positive. That's the good news. They're making 30 to 40 mil, 30 to 50 mil of net income a quarter. And best of all, you get a 2% yield. Pretty cool. Some other kind of stocks that are kind of like the Cheesecake Factory are DRI, Darden Restaurants. Darden Restaurants owns Olive Garden, Longhound Steakhouse. They actually have a higher yield than the Cheesecake Factory. They have a 2.7% dividend yield. So if you like the Cheesecake Factory, maybe check out this stock right here. They've also been a really good performer. And last one, check out ticker symbol EAT. Does anyone know what restaurant this is? Well, it's actually Chili's. Baby back ribs. Check this out right here. 90% of the revenue just comes from Chili's. So if you're looking for Chili's stock, they've done surprisingly well. They cut their dividend and the stock's just been up ever since. Okay, let's get back to the analysis here. Charles, hey, I started to follow you yesterday. You give nice. Hey, thanks so much, Charles. I really appreciate that. So let's keep going. Yeah, we're not going to look at Rich Tech Robotics. I think that one is a bit risky, but they have been doing very well. You know what? We might look at them. Oh, remind me to look at Duolingo. What up, Luke? We'll look at Duolingo. We'll look at Builder, FirstSource. I love Builder, FirstSource. I see their trucks everywhere. So anyway, here's Zeta Global, or maybe it's Zeta, like Meta, I don't know. But anyway, they're a $5 billion company, and they're actually pretty growthy, and they're beating on their expectations. Like the orange line's what the analysts expect. They beat on revenue. They beat on EPS. They beat on EBITDA, so it was a good quarter. Revenue's up 35 after growing 32. Net income improved by 55%, or the net income losses, I should say. So margins are growing. They're deleveraging their balance sheet. Liabilities were 62% of the assets. So honestly, this one is probably just going to keep trucking along up. The financials look pretty sound there. Or as long as they can keep that up, that everything there is headed in the right direction. They're a nice low growth company. So here's a kind of interest rate sensitive stock. This is Builder FirstSource. They sell a lot of roofing shingles, stuff like that. Pretty sure our house uses Builder FirstSource shingles and stuff. But anyway, check out this. They're all over my neighborhood. It's almost for sure we use their roofing stuff. But anyway, check out this multiple. These home builder exposure stocks really trade at low multiples, 20 times net income. Yeah, lumber and lumber sheet goods, specialty building products, windows, doors, and millwork. So it's pretty much like a home builder adjacent play. And as we know, with the high rates, the business has kind of been struggling. Revenue's down 5, profits are down 50. So the margins are starting to get hurt right now, but they've rallied up recently on, the hope of a lower interest rate environment. One thing I love about the stock is the buybacks that they do. So this company a while ago, literally bought back, it was like this quarter. Yeah. They bought back literally, it's like this year, you won't believe this, 20% of the entire company in one quarter. Think about that it was either 10 or 20% of the entire company they bought in just 1 year. It was insane. Okay, what up? Pookie said, I want to know what you're buying right now and what do you think is a good buy? So yeah, here's what I honestly think is a good buy right now. Not financial advice, of course, not personalized advice. I'm not an expert. Again, I don't sell anything. I have no course book. Watch out for people impersonating me. I'll never follow you, DM you. But I just bought 4 shares of IRM, Iron Mountain. This is a data center REIT. I just made a YouTube video about it. If you want to, actually, best way to support me, by the way, is just check out my YouTube channel. I'm streaming, is watch my YouTube stream. Watch a stream from YouTube because TikTok keeps randomly taking on my stuff. But yeah, my YouTube channel is called Nathan Robert. It's also in the link tree in my bio, but just type in YouTube Nathan Robert. I also just made a video on Iron Mountain. And another two stocks I think that are at good prices right now is SFM, Sprouts Farmers Market. Seems like a steal of a deal right now. And the other stock I think is really good is PGR Progressive Corp. It's an insurance company, so they're kind of defensive. So yeah, those are the stocks that I think are at pretty decent buys. Because if I ought to be completely honest with most of y'all, or to be honest with y'all, I wouldn't buy a lot. I wouldn't touch any of these companies at their current valuations. Like I've just let these ride up for years, but I wouldn't touch any of these at their current valuations. Like they're all so expensive, or a lot of them. So these other stocks down here, like the grocery stores, like Sprouts Farmers Market, the insurance company, I think those are better buys, the risk to reward wise. And Iron Mountain, the data center REIT. So let's see here. Accelerate AMPX. Let's check it out. He said it's at all-time highs again because of news of repeat orders. Wow. Yeah, they're up 14% on a day that was not too good. So, that's great. Yeah, they're still only a $1.3 billion company. Yeah, let's go to the news tab right here. Oh, yeah, you're right. Check that out. Empress Technology gets repeat $35 million order from UAS manufacturer. Pretty cool. So they're a battery segment. Wait, a $35 million order? That's huge because they don't do much revenue right now. They're in pure growth phase right now. Like revenue went from 3 million to 15 million year over year. So that's a nice 4x increase. And with this new order, that should even lead to more growth. And also, they are still losing net income, but they're barely losing any money. They can afford these losses. So yeah, this looks pretty interesting. It looks good. I'd be careful. There are small numbers, small market cap, but interesting. Hey, what up? Any thoughts on Hydro One? It's been going down for a while, but I feel electricity demand won't slow down. I agree. What is Hydro One? If you could give me the ticker symbol for that company. Oh, is this it right here? Let me know is this it right here? HY. Oh, there's no chart for it. Huh. Maybe I have to look at the ticker symbol H right here. So they're actually a Canadian company. So we're going to convert their currency from Canadian to USD. So they're a $30 billion company trading at 23 times net income. They're in distribution. Let me see here. Revenue's up 2.6. They're making a lot of money. They're making 100 to 200 mil a quarter. So I hope that's the one you're talking about, but I can't find that one. I apologize if that wasn't it. So is it an American company? It might not be on my exchange to view. So here's One OK, or it's actually not pronounced One OK. It's like One Oak, but let's check it out. I believe this is a natural gas company. Let me see. So yeah, LNG. So liquid natural gas, refined crude, and natural gas gathering. So all the revenue comes from the US. I know the natural gas prices have been booming. So yeah, if we look at the growth, it's been insane. Revenue's up 61 after going 31, and they're super profitable. They're making 800 million to $1 billion of net income a quarter. The best part about this stock is the yield you get, a 5.5% dividend. It doesn't grow too much, but it doesn't need to because the yield's so good. Trading at 14 times net income, that's normal for these commodity stocks. So yeah. So JD, I believe, yeah, this is a Chinese company. So this is an ADR or a Hong Kong company. So you do have to pay an ADR fee. The stock is the same price that it was back in 2014. So it's been flat for a decade. So these China stocks usually just don't outperform. Like, that's the weird part. Their financials are like literally at their all-time high best. Like revenue's up was it 29 or? Okay, well, 25. So revenue's up 25% year over year. That's great. The net income did fall a bit year over year, but we're making 1 to 2 bill a quarter, trading at a low 9 times net income. So yeah, they're kind of like a China. Yeah, all the revenue comes from China. Basically like a Chinese Amazon, like a Chinese retailer. So, what up, Leet? Good to see you, man. Hope everyone's having a great Wednesday. So here's Lennar Corp. This is a home builder. So a lot of the home builders have been rallying on the interest rate cut hype, which did happen today. Also, Warren Buffett has been buying a lot of the home builders. He just bought D.R. Horton. I think he bought Lennar as well, or maybe it was a different one. But anyway, these home builders trade at low multiples. They trade at 11 times net income. But the best part is really the high yield and low payout ratio. You get a 1.5% yield, and the payout ratio is only at 14%. So they could legit triple their dividend right now. They just choose not to. They're a bit cyclical, interest rate sensitive. 93% of the revenue is their, home building, obviously. They make good profits, 500 mil to $1 billion. Obviously, the revenue's not doing too well right now just because of the environment, but the market's so forward-looking that low rates should help them. Let me actually see, did Buffett buy them? Let me go double check. If we go to Buffett's portfolio right here, these super investors have to make all their trades public by SEC law. Yeah, look at that. Increased his position to LEN stock, 5.3 million shares, but his new positions mean he's never previously owned them. He bought UNH. UNH has been pretty popular, so. All right, do DEFT, please. Hey, try not to spam there. What's up? Yeah, let's do it. DEFT. So this is DeFi Technology. So they're a very small name. They're only worth $880 million. So pretty small market cap, but let's just go judge them off their financials because that's what matters. So Valor, okay. I don't know what that is. So all the revenue comes from Canada. Let me check out the revenue. So the revenue looks weird. Like, I don't know how, but their actual revenue went negative. Negative 64 mil. They only did 13 mil this quarter. The numbers look choppy for some reason. So it's because they're a financial company. I got to do more research onto that one. Small market cap, I'd be careful. What app is this? Yo, hey, what up, Mr. Take? Yo, I'm on a brokerage right here. It's where you buy stocks. If you want to get this app I'm on, it's in the link tree in my bio, the very first link there. I love it. So I invested in Web. What's the ticker symbol for that? Yeah, if you got a stock you want to look at, let me know what the ticker symbol. So Omar, what up? He said GameStop stock. So yeah, there's actually one thing I find a value at GameStop. And I wouldn't touch this stock, but here's the thing. This is the actually crazy part. Did you know this? If you look in the top right for GameStop, the whole entire company is worth $11.7 billion. So you're buying a company that's worth $11.7 billion, and they legit have $8.7 billion of cash and no debt. I believe no debt. Let me double check. Okay. They used to have no debt, but now they just issued $4 billion of debt. Yeah, you can kind of see that in the balance sheet. So actually, they're not debt free. They only have like $4 billion in net cash. So they have $8.7 billion of cash and $4 billion of debt. So they have $4 billion in net cash. That's still not that bad. I mean, the whole company's worth 12, so 20 to 30% of the entire market cap is just their cash on hand. But, it's not a company you're buying for the fundamentals. Like the revenue is just like way off its peak. So honestly, I'd be super careful with GameStop. Okay. Hey, yeah, we got to look at General Mills. I forgot to get to that one. My bad. So yeah, let's look at General Mills right here. This is that company. They own like Cinnamon Toast Crunch, Pillsbury Dough, yogurt, ice cream brands. So the stock has not done too well. They reported earnings this morning. One thing I like about this stock is the yield. You get a 5% dividend yield with this company, but let me see what they did. So they met on revenue. They beat on net income, which I'm guessing was some one-time adjustment. And they beat on EBITDA. So actually, it was a pretty positive quarter. So yeah, if we go to their net income right here, it says $1.2 billion. That actually wasn't true. It was actually probably around 500 to 600 million. So do know that EPS or the net income was like half of that. But yeah, the sales are down 6.8. I don't love to see this. Revenue's down 6.8, but analysts did expect this. But again, it's just not great when your organic revenue's down 7. So honestly, that explains why the stock hasn't done too well. I'd like to see the growth come back, but yeah, you're buying them for the dividend and low valuation. You do want to see the growth come back. What is your favorite dividend stock besides Maine and your other favorite one? Under 60 share. Again, it's probably not going to be the best answer because every stock in here pays a dividend. This is my dividend growth portfolio, by the way. So every stock in here pays a dividend. But yeah, another great dividend stock, in my opinion, is IRM, Iron Mountain. They're not under $60 though, but they have a 3.3% yield and only a 61% payout ratio. Another high yielding stock that I own is T-Row. This is an asset manager. They have a 5% dividend yield and only 11 times net income multiple. And they have no debt. Maybe I should look into T-Row. I think this one might actually impress you guys. So this company, if you look, has a 5% dividend. And if we go to the balance sheet right here, they have a fortress balance sheet, making net income every quarter. It looks pretty good. Someone said, I love WES for a dividend. Maybe let's look at WES. So Western Midstream. Oh, do beware. If you buy this stock, you do get a K1 tax form. This is a midstream. This is an MLP. And it's the same price that it was back in 2012. But yeah, you buy these for the high dividends. Because they're an MLP, they have these high yields. But yeah, 9.3% yield is crazy on WES. And it's probably sustainable. But yeah, these just don't really outperform in the long run. I'll put them on my watch list, but yeah. Well, actually, you know what? No. I have a new one for you. HESM. You know what? Forgive me. This probably is one of the best high yielding dividend stocks out there. I'm surprised I don't talk about this one more, but this is Hess Midstream. You actually don't get a K1 tax return. You get a 7% yield. That's sustainable. It's not really 100% payout ratio. So HESM is a really cool dividend stock. I saw someone say Meta stock. Yo, hey Burr, what's up, dude? Let's check out Meta. Hey, what up, Adef? We'll look at Google too. What up, Professor Pumpkin and Tiva? Aaron, what's up, dude? We'll look at Rocket Lab too. So here's Meta Platforms. I'll be quick about this one because everyone knows them. But yeah, they have the Meta glasses. They own Threads. Threads is nearing the same amount of daily active users as X, which is pretty crazy. It's a Mag 7 company. They're trading at 28 times net income. I really feel like this could stretch up higher. Like Mag 7 company, I feel like it could go to a 30 times net income. If you go to their active users here, this is what's crazy. They have 3.48 billion daily active users. Like, that is insane. They also just print money, making near 20 billion in net income a quarter. Revenue's up 21, net income's up 36. So they're expanding margins. 40% net margins for a $2 trillion company is insane. They also do buybacks and dividends. So pretty cool. So let's start with this one. It's been a good stream. I unfortunately got to go. Hey, have a great rest of your night, Joel. I appreciate you coming over. So GRBK, and then we'll pull up Tiva, Rocket Lab. So this is Green Brick Partners. This one's actually done pretty well. It's done insanely good since 2019. It's like 7x'd. Let's check out the dividend. No dividend on this company. They trade even after that huge rally. They only trade at 9 times net income. Oh, so they're a builder operator. So like a home builder type stock. And the high rate environment it's probably hurting on their revenue, but they're so forward looking. Revenue's down 2, but they're still making 100 mil a quarter. Great balance sheet. I'll put them on my watch list. Thanks for that. Kayi said, what is this app? Yeah, hey, by the way, I'm on a brokerage. It's where you buy stocks on. If you want to get this app I'm on, it's in the link tree in my bio, the very first link there. It's an affiliate link, full disclosure. So here's Tiva Pharmaceuticals. So unfortunately, this stock hasn't done too well. It's the same price that it was back in the year 2000. So it's been flat for quite a long time. If we go, let me see, what's their net income multiple at? So they trade at, oh my goodness, let me see. Okay, so the net income multiple is negative. So, okay, so yeah, look at that. They lost a bunch of money, but now they've made net income the past 2 quarters. We want to see them continue these net income positive numbers. They sell general products, including OTC. So here's the thing. If we go to this on an annual revenue, their main business, their generic products revenue is actually lower than it was in 2018. Like way lower than it was in 2016. So their business just isn't really growing, unfortunately. And that might explain why the stock hasn't done too well. So we really want to see the growth come back. And what's the sales doing year over year? So yeah, the sales are only up by 0.2. We really want to see the growth come back. Hey, Jan, Starlin, thanks so much for the roses there, dude, for the gifts. I really appreciate that, Jan. If you got a stock you want me to look at, let me know. I really do appreciate that, my friend. I hope you're having a great day. WBTN just signed a deal with Disney. WBTN. Oh, Webtoon Entertainment. Okay, so let's check them out. This is a $2.7 billion company. That might explain why the stock rallied up so much then. Geez, let's see. Yeah, news. New all-time high as Disney to acquire 2% interest. You know what? That's pretty cool. You know why? Because your boy is a shareholder of Disney. I got 15 shares of Disney right here. I'm up 36% on them. So yeah, I guess Disney now owns 2% of this company, which would be worth 27 million. So Disney owns 30 million of this stock. They're probably up, or probably a lot more now. But anyway, they have a great balance sheet. Revenue's up 8. They lose net income every quarter. So hopefully this will bring some growth and net income to the name. Anyway, I don't even know what Webtoon is. Okay. Let's see here. Aaron, what's up? We got to look at Rocket Lab. So let's look at Rocket Lab. Then we'll pull up Google stock. We can look at that one too. So here's Rocket Lab. Yo, this is one of my favorite space companies. If you're looking for a space stock, Rocket Lab is a beast. So they actually just acquired a company called Geost, which will add even more growth to what we're about to look at. But check this out. Their space systems revenue is most of their business. It's 67%, and it's very growthy. Like it's up 30% year over year after growing 94. So, I mean, it just hits a record every quarter. And also their launch services is also at a record. Check this out. It is up 58% year over year. It's never been over 45 million. So incredible record quarter. They're beating on analyst expectations, like the orange lines, what the analysts expected. They beat on it. They are still losing net income every quarter. So do beware of these huge losses. But revenue is really growthy. Yo, Jan, you said DEFT. Yo, I literally less than 2 minutes ago just covered DEFT stock, Jan. If you don't mind waiting a little bit, we'll check them out. But if you have a different stock you want me to look at, let me know, Jan. Again, thanks for all those roses. I do appreciate that. So let's see here. Google stock. Let's do it. What up, a deaf mute? So let's see right here. And then we can pull up, what up, Art? We'll look at CRMD, UNH, and Zim too. Yo, Zim is like a shipping dividend play. So here's Google stock. This one is literally at an all-time high. They deserve it as well. Let's see if there's any news. Oh yeah, Waymo and Lyft launch a robo-taxi partnership. Pretty cool. Google commits $7 billion in UK AI infrastructure. Reddit negotiates AI content licensing deal with YouTube. Like, there's so much news for this company. I could spend all day covering it, but we won't do that. Let's look at the actual financials though. So check this out. This is their multiple. The PE just stands for net income multiple plus any buybacks or dilution. So Google trades at 26 times net income. This is a Mag 7 stock. I really feel like it could go higher to like a 28 or something PE before it really maxes out. And check out the revenue growth. The revenue's up 13% year over year. Originally, people were pricing Google as an AI loser. ChatGPT is going to replace Google search, but now Google's like implemented AI into the search, and now they're seen as an AI beneficiary. And now they've repriced the whole company. So the revenue's up 13, but the net income is up 19. So they're actually expanding margins, 30% margins, great. But the best part about Google is actually how shareholder friendly they are. Google's so big, it's really hard for them to really buy a company without regulators, getting on their neck. And that's why they do these insane share buybacks. They legit spend 15 to 16 billion in net income every quarter solely buying back their own shares. And here's what that does for you. The net income's up 19, but net income per share is up 22.2 plus the 0.3% yield. Google's just so shareholder friendly. I love them. I love YouTube as well. Invest in what you use. It's great. So let's see, CRMD, let's do it. So this is CorMedix. This is actually my most recent purchase, and they have not been doing too well. Oh, actually, I bought a share of them today. So I guess I did buy a stock today. Here, I'll show you that. Check this out. If we go down here, September 17th, we bought one share of CRMD at $11.33. So this is a healthcare company. And again, I can't stress this enough. If you like this company and you want to maybe buy it, you cannot do it with a lot of money. Like, it has to be some like $50 or $100 position. So check this out right here. If you look at the top right, the whole company is only worth $830 million. This is a pharmaceutical company. They only sell one product. Legit, like 60% of all their sales just come from one customer. But anyway, here's the cool thing. Remember that market cap? Remember how this company was worth $830 million? Well, legit, they have $190 million of cash and no debt. So that takes a lot of risk off the table. That legit 30% of what you're paying for, 30% of their valuation is their cash on hand. And so that gives them tremendous freedom, a huge safety net. Actually, since they have so much cash, $190 million of cash, for some reason, I don't know why they did this, but CorMedix that's the reason this stock rallied up right here. CorMedix just bought $5 million of the stock. Again, it's only $5 million, but they're an $800 million company, so it's actually pretty significant. So yeah, they just bought $5 million of TLPH stock, which is pretty interesting. And here's the best part I haven't even gotten to yet, is the financials. The revenue, this used to be a revenue-less company. If we zoom out, the revenue was nothing, $29,000 a quarter. But now they finally have sales. They finally got FDA approved. And the sales are $39 million. And guess what? Out of this $39 million, legit, $19 million of it was after-tax net income. They have Reddit-type margins, like 100% margins. Like, it's literally ridiculous. Oh, if it would load here, the gross margins are legit like 95%. It's insane. And the net margin is 50%. Really? Maybe I have to reset the app. I've had this app open for like 2 hours now. I'm surprised it hasn't crashed. Yeah, check that out. Gross margin, 95%. So insane. And they also just acquired a company. It's double-digit, synergistic, accretive to EPS. They just bought $5 million at top. Anyway, these are pretty interesting. No debt, 30% market cap cash. They are still extremely risky. And as much as I love them, I wouldn't put a lot of money in it. So Marcel, what's up, man? He said UNH stock, and you know who just bought the dip on UNH stock? You won't believe this. If we go to Buffett's portfolio right here, again, these are super investors, got to make all their trades public by SEC law. So, we can see his exact holdings. He has Coca-Cola, Chevron. And if we go right here to his newest position, we go to new. So he's never previously owned the stock before, is UNH. Warren Buffett himself just bought 5 million shares of UNH. And that's why the stock gapped up. Warren Buffett doesn't buy a stock unless he really does his due diligence on it. So it was just seen as really bullish sentiment after that happened. So I wouldn't touch this one at 340. Honestly, I would touch him at like $300. Or 310 or less with meaningful money, but you get a 2.5% yield. We're a customer. We actually use their OptumRx business. And the multiple is so low, they're trading at 14 times net income because the future is so uncertain. Like if you go to their net income estimates, like the net income is expected to collapse over 50%. The EPS is going to go from $5.98 to $1.70. That $1.70 won't even be able to afford the dividend. So there is still a lot of future uncertainty. The stock's done great now because the sentiment seems fine, but as soon as we get to like closer to the next earnings report I think they're going to have some trouble, probably touch that $300 level again. So that being said, I wouldn't really touch this one significantly, especially at this price. And if you do want to buy them, I wouldn't make them as a huge position. I'd probably touch around close to $300. Oh yeah, hey, thanks, Jello. Yeah, hey, Labs, if you want to get this app I'm on a brokerage. Yeah, if anyone wants to get this app I'm on, it's where you buy stocks. It's in the link tree in my bio, the very first link there. So yeah. So what up, Rub? He said, Rubber Band. Nice. He said Zim stock. This is actually a shipping company. And hey, John, thanks so much for the rose there, John. I appreciate you. Hey, we'll look at NVIDIA. Don't worry. Yeah, try not to spam their story. Oh, no. Yeah, hey, we'll get to NVIDIA. Don't worry. So here's Zim Integrated. This is a huge dividend play, and their dividend changes every single quarter. Like notice for the whole year in 2022, you got $27 in dividends. The whole stock price is $14. So you got more than 100% return in dividends. Unfortunately, I wish they kept most of that money reinvested in the business. But anyway, this company really benefits from all the supply chain issues. And this company has a rule where 50% of the net income they make will be returned to you as a dividend. So this quarter, if you notice, they only made $23 million. The dividend's going to be it's basically they're not going to pay a dividend this quarter. But whenever they have these crazy quarters like this, $1 billion, you get a nice fat dividend. But there was this time like right here where they didn't make any net income, so you never got a dividend. But 2022 was the year, man. They were, when there was the war fear, they shut down the canals and the certain seas were closed, the main shipping. What was it? The Panama Canal? I don't remember. But anyway, that one benefits from the supply chain issues, and you get the nice yield. Hey, what up, Lucas? He said OXY stock. We were just, if we go back to Warren Buffett's portfolio right here, and hey, Zach Spider. Dude, no way, Zach Spider. Thanks for the 17 roses. I really do appreciate that. If you got a stock you want me to look at, let me know. I got you, my friend. So check this out. If we go to Buffett's portfolio right here, one of the stocks he owns is OXY, Occidental Petroleum. This is an oil and gas type stock. And hey, this app is telling me that there is what is this? A bullish continuation triangle, and the rise probability is a 95% chance. Well, anyway, that's a technical analysis. Let's go look at their actual financials. What app is this? Yeah, hey, again, if you want to get this app I'm on, it's a brokerage. It's in the link tree in my bio, the first link there. Hey, so here's one pretty cool thing we get here. The realized price has been falling a little bit because of just the prices of oil have been falling. So that's why the stock is, well off their peak. This was $70. Now it's only 47. You look at Chevron, Exxon, it's kind of seeing the same thing here. But we do get some cool little data here. Net sales volume per day. They're doing 1.4 billion sales a day, I guess. But yeah, 80% of the revenue is the oil and gas. 19% is their chemical, and then they're a midstream and marketing business. Pretty cool. So yeah, if we go to the revenue, it's down 6% year over year, normal for the industry. So yeah, they're making a lot of money. Profits did fall a bit, but What's the yield too? You get a 2% dividend yield. Not too shabby. I'm interested in buying stocks. Any recommendations? Yo, I am Canadian, by the way. Okay, what's up, Zach? That's awesome. You're interested in investing. There's a few companies that I think are at, I will say a lot of stuff is overvalued. Like if I go to right here, I wouldn't pay the valuations of any of these stocks. But some companies I do really like are at right now valuation is PGR. We looked at this one a little earlier, but Progressive Corp, it's a stock that, is not at all-time highs. And I'm not just recommending it because they're not at all-time highs. I'm recommending it because they're a great financially sound company. Like this is the net income. It just hits a record every quarter. It's crazy. And same with the sales. I mean, look at this. The revenue is super good. Like this is a great dividend growth company. That's Progressive stock. Another one that doesn't pay a dividend is SFM, Sprouts Farmers Market. They're like a healthy grocery store. So yeah, someone said any undervalued penny stocks. That's kind of, again, I don't like to touch penny stocks, but I do have a couple. And again, if you do want to buy these stocks, you can't make them with a meaningful amount of money. Like you have to make it a small size position. Like CRMD, $800 million company, DCTH, 300 mil, GHM, 400 mil. I bought Innodata at a $900 million market cap, but now they're worth over $2 billion because they've doubled. But anyway, those are some of the small caps. If you want me to go over any of those, let me know. But yeah, I'd be super, super careful. Hey, what up, Juan? He said Adobe. Hey, I've been seeing some people ask about this one. Adobe is one of those software names that have unfortunately not been doing too well. And hey, what up, Luffy? Yeah, we can look at ISRG too. Remind me to look at that one. Yo, they've been struggling. I heard they had some they gave a presentation of their new medical devices and it just didn't impress investors or something where it's not up to date or I don't know. Anyway, hey, Scrappy, thanks so much for the rose there. I forgot to mention that. Thanks so much, Scrappy. FedEx earnings tomorrow. Hey, that could be interesting. So here's Adobe stock. It's one of those software names, they're really seen as an AI loser right now where ChatGPT potentially will replace them in 10 years. I know someone who just made a great logo in Photoshop or in ChatGPT that would have taken me forever in Photoshop. Like it looked great. Like it didn't look AI generated. But that's why they're being hurt. I honestly think humans are always going to need the last touch to art and stuff like that. So I really feel like Adobe's going to get slowly unpriced as an AI loser to a slight AI winner. And this probably go up to $500 or something. But I wouldn't trust it with a lot of money. But here's what's so cool about them. The right now numbers look great. The revenue's up 10, so the revenue's growing double digits. It grows 10% every quarter. The net income's doing great. Like they're making 1.8 billion of net income every quarter pretty much. The FCF, which stands for free cash flow, is even better. They're doing over 2 billion of free cash flow a quarter. They own photo. Adobe literally created the .pdf. They open source .pdf so anyone can use it. So if you like PDFs, you can thank Adobe. They own Adobe Acrobat. They have like a DocuSign competitor. They own Photoshop, After Effects. I'm on an Adobe product near daily. So yeah, I like that. I would buy them at this price, honestly. Not with a huge amount of money, but I do like them. Also, DocuSign's they're another digital e-signature business. Adobe's definitely safer than DocuSign. You know what I might do? Like if I go crazy, I might legit sell all my DocuSign and buy Adobe. Would that be crazy? Okay, hey, what up, Eric? He said TAP stock. Yo, that's another company I owned. It's a beverage stock. If I go back here, that's another stock I'd actually recommend it right now. Prices. I am down 9% on them. They're much better than a ticker symbol STZ, than a BUD. I legit think this is the best drink stock, and they sell I can't say the kind of drinks, but it's a drink that I can't say on TikTok. But check out the revenue growth. It's actually declined. This is why the stock has been struggling, but that's kind of normal for the industry right now. The revenue's down 1.5, but it's really these profits that I love. This is a company with a near 4% dividend that's completely safe, in my opinion. Check this out. 3.88% dividend yield. Oh, and an insane share buybacks. Y'all aren't going to believe this. This is why I own this stock. It was so impressive the first time. It still is impressive. But check this out. They did $430 million in net income just this quarter. So remember that. $430 million of after-tax net income just this quarter. Well, the dividend only costs $93 million a quarter. So they could legit pay for their entire year of dividends just in the most recent quarter. So since they have so much leftover cash, what are they doing with it? They're deploying it into share buybacks. They're buying back their own stock like crazy. So not only do you get a 4% dividend, but look at this. The net income is down by 0.2, but the net income per share is up by 5. Uh-oh, I just slapped my mic. Hopefully that didn't disconnect. Okay, we didn't. Perfect. But yeah, that's why I own this one. That's great. And they're at, I'm going to re-add them to the top of this watch list to remind me to buy more of them. I really like that name. What stock is this? Yeah, that was TAP, ticker symbol TAP. They're a drink company. Um, they own some popular. I would love to cover that company and tell you what they do if I want to get banned on TikTok. Because every time I talk about that industry, I get taken down. By the way, the best way to support me is subscribe to my YouTube channel, and it won't get taken down. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. But yeah, I'm dual streaming. So if you miss anything, you can replay it. So someone said APLD. What up, Willie? Yeah, try not to spam there. My fault I didn't get to it. Oh, yeah. No, I'll be really quick about this one because this stock is really risky. So they're in the NVIDIA portfolio. So as we know, NVIDIA owns a lot of stocks. And one of the stocks they own is APLD. And they've really benefited from being in the NVIDIA ecosystem because NVIDIA has gotten them a huge deal. Oh, yeah, China orders tech companies to stop NVIDIA AI chip purchases. That's not good. But yeah, basically, APLD signed an $11 billion deal with CoreWeave. And CoreWeave is, another huge company that NVIDIA owns. So anyway, APLD is pretty interesting. So they're a cloud data center hosting company. Is APLD or Rocket Lab overvalued? I think both of them are overvalued, Plasma. Yeah, to be honest with you. APLD does look overvalued for sure. Opinion on the S&P 500? Yeah, I love the S&P 500. That's an index fund. You can't buy index funds on brokerages or not on this one. So you have to buy an exchange traded fund, just a fund on an exchange. And that's the VOO. This is literally the exact same thing as the index fund, the S&P 500, or the index fund S&P 500. It's just on an exchange. So anyway, it has the exact same holdings, exact same weightings, by market cap, NVIDIA, Microsoft, Apple, Amazon, Meta. I'd happily own all these companies individually. So I love the S&P 500. Most investors lose to the S&P 500. What app are you using? Yeah, hey, what up, Questine? Yeah, if you want to get this app I'm on a brokerage. It's where you buy stocks on. If you want to get this app I'm on, it's in the link tree in my bio, the first link there. So yeah, let's see. What up, Luke? He said, ooh, AMR stock. I believe that's a coal company. So I think. And unfortunately, the commodity of coal, well, let me just go look at their financials. I forget what they do. So, yep. So this is coal. Okay. So they're a coal company. Met coal revenue. So yeah. Are they profitable? So, ooh, look at this. So if we zoom out, this company a year ago was making a couple $100 million a quarter, 100 to 200 mil, but in the most recent quarters, it's negative. And that totally explains why the stock hasn't done too well. The profits went negative and they lost the growth. Let me see the actual revenue. Yeah, revenue is down 31% and the net income went negative. That's tough so I can totally understand why they've rallied so much. So yeah, that's a play. Again, it's a commodity coal. Hey, Kadu, good to see you, man. Free me. Hope you're having a great Wednesday, my friend. Hey, G-Star, no way, my friend. Thanks for all of the roses there. Yeah, let's do it. He said CIFR stock. Thanks again for all those roses. I appreciate that. Then we'll look at ISRG. Yo, Luffy, you still here? We'll check out ISRG after this. TAP is a company that could keep falling. Yeah, they definitely could keep falling. Why did SLDE fall? Yo, we'll check out that stock too. So here's Cipher Mining. This might be Chinese. Let me just double check. No, it's not. Okay, so I thought this was like a gold mining company. If we go, they actually mine Bitcoin. If we go to their revenue, right here it says 100% of the revenue comes from Bitcoin mining. So do beware. You usually go to the balance sheet for these kind of stocks, and you trade these stocks off their net asset value. So they have $1 billion of assets. The market cap should be around $1 billion. Oh, it's 4.8 billion. Okay, so something's happened recently to cause a huge rally. Well, anyway, interesting. AI-driven HPC expansion. I don't know, man. There's something out. I don't know. Looks like a Bitcoin adjacent stock. I wish I could give you more thoughts on them. I do apologize there. Oh yeah, here's a cool ETF. Kayla, what's up? SCHD. Yeah, this is if you're looking for a high. What app are you recommending in the USA? Yeah, hey, this app right here, this software. If you want to get this app I'm on right now, it's in the link tree in my bio. The first link there. It's my favorite brokerage. I also have Webull. I have multiple brokerages. I buy stocks in a brokerage is just an app where you buy stocks on. And then I have Robinhood as well, but they're just not as they don't have any useful features. Like you can't analyze a company like you can on here. This app right here, this one has all the useful features. So that's why I've been using this one. Yeah, if you want to get this app I'm on, it's a brokerage. It's in the link tree in my bio, the first link there. So here's SEHD. This is like a higher yielding dividend play. So if we go to the dividend, it's a 4% or a 3.8% dividend yield. It owns a lot of the higher yielding plays that actually have sustainable dividends. I love AbbVie. I'm actually glad that it's their top holding. I love Chevron, Home Depot, Altria, Pepsi, ConocoPhillips. These are the better, higher yielding names. So honestly, SEHD, not too shabby. I mean, they have some names like Verizon, for example. Like this one has a crazy high dividend. Some of these high dividend names just don't outperform in the long run. Like check this out. Verizon, did you know this? Verizon is the exact same stock price that it was back in 1998. So yeah, you get the nice 6% dividend, but there's no growth to the actual stock price. SCHD actually does have some growth. They have some better ones, but yeah. I love this app right here. Yeah, this app is the best. This app I'm on, it's also publicly traded. G-Star, let's look at CDE company. So wait, can you show me the Trump portfolio? Yeah, I can pull it up really quick. So yeah, if we go right here, we can see all the super investors and their exact portfolio. Yeah, here's his portfolio right here. Obviously he has the DJT stock, Apple, Nvidia, and some of the more, there's only so much he has the best in the mega caps. Okay, so SLDE. Oh wait, there was another stock I wanted to look at. Oh wait, CDE, and then we'll get to SLDE. So this is Courier Mining. Oh, this might be another Bitcoin mining company. They've had a nice little rally. They look very similar to that other mining stock we were looking at. So, this one is actually a gold one. So yeah, these are all the different mines that they own. 64% of the revenue comes from the US. So yeah, they're a gold play. So yeah, they own gold mines, and I bet the revenue and profits have exploded because of gold prices. Yeah, the revenue's up 120%. The profits was up 4,000% to 70 mil. That's insane. It's mainly just from the actual price of gold. The commodity of gold is ticker symbol IAU, and it is at an all-time high pretty much today. Look at that. Gold from March 2019 has 3.5x'd. So, if you got any gold chains, gold jewelry, maybe go hit up the pawn shop and sell it if you don't need it or something, because gold is legit at an all-time high. It's up 3x from 2021. Okay, what app is this? Yeah, hey, Purple, what up, man? Yeah, hey, I'm on a brokerage right here. If you want to get, it's where you buy stocks. If you want to get this app I'm on, it's in the link tree in my bio, the first link there. So let's see here. Hey, what up, Plasma? Good to see you, homie. He said GitLab up like 20% actually. Let me see, GitLab. Since their earnings, yeah. So this stock down here reported earnings, and now they've recovered it all, which is great news. Because I still don't know why they fell initially, because the revenue numbers were great. Like the orange line is what the analysts were expecting. They beat on revenue, they beat on net income, and they beat on EBITDA. So it was odd to see the stock price fall, even though they beat on every metric. So that's why I think the stock is starting to recover now. Maybe it was the bad guidance, or I didn't even look at the guidance, but yeah, interesting. Yeah, MRVL is like a really cheap, they're really cheap right now. So ISRG, let's do it. This is an actual medical device company. If you're looking for exposure to like a medical stock, not like a insurance company, but one that actually owns the medical devices, like the screening, MRI devices, this is the stock that owns that, or most of the market share. If we go to their instruments and accessories revenue, it is booming. It's up 18% year over year, after going 15, after going 20, after going 15. Like the revenue just hits a record every year, every quarter, not just their instruments, but also the systems revenue. That's up 30% year over year, also to a new record. And the services revenue, I mean, just so consistent growth here. They actually service their actual instruments, also just hits a record every quarter, reoccurring business. So if we also look at this net income, it's insane. They're making 500 to 700 million of after-tax net income a quarter. Revenue's up 21. Fortress balance sheet right here. I mean, this is what you want to see. This company legit has 5.5 bill of cash, no debt, making 500 mil plus of net income a quarter. What's the actual net margin? They have 20 to 30% margins. Insane. So yeah. What company are we looking at? I just joined. Oh, hey, yeah, that was ISRG. Intuitive Surgical, ISRG. Pretty cool. They're a mega cap. Yeah, medical device company. By the way, if you missed anything, I'm also streaming on YouTube. You can replay the stream. That's the number one way to support me. Again, watch out. I sell nothing. I have no course, book. I'll never follow you, DM you. I have no Discord, WhatsApp. If you want to support me, best way to support me is just subscribe to my YouTube channel. I'm streaming on there as well. My YouTube channel is called Nathan Robert. But yeah, if you missed anything, you can replay it. Okay, so let's see here. BAB.L. I don't know if I can find that stock, to be honest with you, because it has a dot in it. I can try it. Oh yeah, see, it's not on this exchange, so unfortunately, I can't view that company. Hey, hey, what up? Someone said SoFi right here. Let me see if it can be purchased. Hey, nice. So what up, Nyan? Here is where was it? SoFi right here. Yeah, I do own this company, by the way. This has been one of my best performing stocks. This is a fintech right here. Uh oh. ALAB. Or wait, not ALAB. Wait. I'm reading the wrong thing. SoFi. Okay, sorry. I might have to reset this app real quick. Okay. SoFi Technologies. Let's do it. So there we go. Now the app works. Sometimes you just got to reset it every couple hours. So anyway, SoFi Technologies is at $27 a share. They deserve to be at all-time highs because they are extremely growthy. I do own this company, so I might be biased, but check this out. Like the financials are so good. If we go to their financial services revenue, it's insanely growthy. It's up 105% year over year after going 80, after going 220. This is insane growth on the financial services business. And that's why with a company with high revenue growth, abnormally high revenue growth deserves an abnormally high PE ratio, in my opinion. The lending revenue is also at a record, up 30% year over year. So this is why I think people are really starting to take SoFi serious. They're extremely growthy. Revenue's up 42% year over year. The revenue was $850 million. Out of this $850 million, $100 million of it was after-tax net income. They're profitable every quarter. So I think for those reasons, people really like SoFi. And that's why I think it's justified for them to be at $27 a share. I wouldn't buy them at $27 a share, but I wouldn't sell them really either. So yeah, what apps do you use? Yeah, hey, again, if you want to get this app I'm on, it's in the link tree in my bio, the first link there. And someone said, how much is the commission on the app you use? Yeah, hey, full disclosure, if you go to the link tree in my bio, it is an affiliate link. If you sign up on this app that I'm on right here and deposit $100, we'll both actually get a $20 fractional share of NVIDIA. So full disclosure, I do get a little benefit. But I also have the other ones linked up there too. If you want to get Robinhood, I actually get a $5 free little fractional share if you sign up with Robinhood, my affiliate link, and we will as well. So anyway, but this is my favorite one though. All right, so let's see here. Truman, what up, dude? He said, "Can we look at BBAI?" So you're not gonna like what I have to say about this stock, to be honest with you. And hey, yeah, we'll get to Shopify. Don't worry, I love Shopify. Yeah, under $25 a share is where I'd buy SoFi, or like significantly below $25 a share. I asked about BE the other day, and it's ran another 20%. Now I'm hesitating to jump in. Hey, we'll look. Is that Boeing or Bloom Energy? Maybe we'll check them out. I remember them being really risky. But check this out. Here's Big Bear AI Holdings. This is a $2.23 billion company. Remember that number. The company is worth $2.23 billion, and they just lost $228 million, which if you're good at math, you know, that's 10% of the entire market cap they just lost right now in net income. And, you know, and they lost 61 mil the previous quarter, another 150 mil the previous quarter. So they're losing a bunch of net income all for a business that declined. The revenue was down 19% year over year. So it's just hard to really justify this momentum. Like the business isn't growing. They're burning through net income. I think this one is just hyped up. From a financial point of view, I'd be really careful with Big Bear AI. I wouldn't have them as a meaningful size position. So yeah. Should we be careful with SoFi? I noticed they're doing, 50% of the revenue comes from loans. So let's look at Shopify. You know who actually owns Shopify is Kathy Wood. You know, she's not too respected anymore because her portfolio or her ETFs have been doing terrible. But one of the stocks she owns is Shopify, and this is a stock I love. I wish I owned them, to be honest with you. I regret not buying them. Here's why. This is a great growth company. If we look at their annual sales, it's so clean. It just hits a record every year, every quarter. So the revenue's hitting a record every year, every quarter. And same with the profits. They're printing a couple hundred mil of FCF, which stands for free cash flow. They're making a couple hundred mil of free cash flow every quarter. They're net income positive every quarter, making a couple hundred mil. They have an absolute monster balance sheet as well. No debt, like $8 billion of cash. Like they're just crushing it. So yeah, they take a fee. They basically collect royalties. German said, picked up some HESM and VZ today. Hey, I'd be careful with Verizon. You know, Verizon has a safe, I love HESM. Actually, HESM I feel is a great move. But Verizon, here's the thing. If you're buying this stock, you're buying it to mainly max out your income. But check this out. Verizon is the exact same stock price that it was back in 1998. But again, you get the sustainable 6% yield. Robinhood gives a 3% match. Hey, that's kind of true. So Robinhood only gives a 3% match in your Roth IRA, which you can only deposit a certain amount a year. So yeah, they match you 3% on, check this out right here. For 2025, I've deposited $1,300 and they've matched me $39, that 3%. And to get that 3% match, you actually have to pay $5 a month. So you have to pay $5 a month. But with this app right here, you don't have to pay $5 a month. And, with Robinhood as well, you have to pay $5 a month to get the 4% APY. Well, you get a 4.10% APY here on your idle cash. And again, no monthly fee or anything like that. So yeah, this is the lowest fee, most useful brokerage in my opinion. Again, if you want to get this app, I'm on. It's in the link tree in my bio, the first link there. So let's see here. Can we look at FLR? What up, Mark? Let's do it. So this is Fluor. So this company, let's check them out. This is a $6.5 billion company. The stock, unfortunately, is the same price that it was back in 2006. So the stock has been flat for a long time. They trade at 1 times net income. That seems odd. Let me see if that's real. Here's how we can check if that's real. So that this actually isn't real. So check this out. If we look right here, they made 2.44 bill of net income. That actually wasn't real. You always look at you always should compare the operating profit to the net income. And that you can tell if it was some one-time little trick, and it was a trick. So this 2.4 billion in net income they made wasn't real. They actually slightly lost money on this quarter technically, and the revenue lost their growth. The revenue's down 6%. So I think that's why the stock gapped down so significantly on earnings, because they actually lost money. The sales declined by 6%. But they did some trick or something happened to make the net income positive, but it's not. So yeah. Getting 8.1 with your link, Nathan Hartford 3. Hey, nice, Jello. Yo, I remember I got 8.1% when I first got it too, but then it went away. So yeah. Yeah, by the way, if you get this app I'm on right now, you'll actually get an 8% APY on your idle cash for 3 months, and then it goes down to 4%. So pretty cool. And, as we go into a lower rate environment, that'll be really helpful because you're not going to be able to get the same 4% yields in money market funds because it goes down with interest rates. I'm in the UK. I'd be charged exchange fees. I don't actually think so. You'd be charged for ADRs. Like if you buy if you're in the UK and you buy a Canadian company or a Chinese company, then you pay an ADR. You don't pay an ADR for the exchange. Or anyway, yeah. Let's see, Snapchat, SNAP. Yeah, did y'all know Snapchat was publicly traded? And hey, Yazzo, thanks so much, Yazzo, for the roses. I didn't even see that, my friend. Thanks so much. Yeah, we'll get to qubits after this. Thanks so much, Yazzo. Hope you're having a great Wednesday. So here's Snapchat right here. This is a $13 billion company. Here's why this stock is at an all-time low. If we zoom out on the monthly, or really if we zoom in here, the reason Snapchat is the same price, it's lower than it was in 2017, is because they're burning through money. They just can't get profitable. If we zoom out, they just forever, they just lose hundreds of millions in net income a quarter. And they're still losing money to this day. Like they lost 250 mil this quarter. Revenue's up 8.5. But here's a cool metric we get here. Here's their daily active users, not like monthly active users, but their daily active users is 469 million. Pretty cool. But yeah, it's this net income negativity that's really put a strain on their stock price. It's unfortunate. So yeah. NVTS, huge run today. Do you think it can continue? I actually don't like this company off their 10% rally. I just don't like this company based off their financials. The reason the stock rallied up right here is because they got some sort of NVIDIA partnership, NVIDIA deal. I don't remember exactly what the news is, but it better be game changing because this company, if this deal never happened, if NVIDIA never helped them out, this stock would almost for surely be at a zero and be bankrupt. Because if you look at the revenue's down 30% year over year. And look at this, it was down to 14 mil. The analysts are expecting it to be 9 mil and 10 mil. Like the revenue is expected to fall another 40%. And not just revenue decline, but huge losses. They lost 50 mil. They've lost over 100 mil the past year. And the whole company's worth 1.4. So they've lost 1/14 of the market cap. I think that they're just, be very careful with them. You're really just relying on the NVIDIA partnership. And it's like you're relying on the NVIDIA partnership while ignoring the not good financials right now. It really needs to help out their financials. Like the financials are not good there. So yeah. Hey, what up, Looney? What up, dude? He said FEIM stock. Let's do it. This is Frequency Electronics. Snapchat doesn't have good monetization pathway. Oh, really? Yeah, I've never tried the ads on Snapchat before. Um, yeah, the ads are always kind of weird on there. Anyway, if we go to the top right, this is a very small one. They're only worth $260 million. So do beware, it's an extremely small market cap, but they've had a lovely rally recently. This looks exactly like Powell Industries almost when they first started rallying. Let's go check out what they're doing. So FEINY. Does that stand for New York? Well, this business is booming. It's up 64% year over year to a record. That's incredible growth. Let me see. Market domestic is 93%. So the revenue is actually down 8% year over year, but they are net income positive. So since they made 15 million this quarter, they didn't actually. So the net income, they're really trading at like 20 to 25 times net income, or actually maybe even higher. They've deleveraged, which is great. That's great deleverage. I would be concerned about the growth. The revenue's negative. I do have questions for that. The margins fell as well this quarter. So something happened the most recent quarter. That's why they fell. That was a little weird. Hey, what up, Brady? He said, why did CrowdStrike spike after hours? Yo, I love CrowdStrike. And hey, Cameron, dude, Cameron, the turtle with the 10 roses. Yo, we'll look at Fubo after this. Remind me, I got you, my friend. We'll look at Fubo. Wait, we have to look at Yazzo's stock. What was his? Oh, it was Qubits. Okay, yeah, Qubits. Oh, but there was a stock I was wanting to look at over here. You know what? I forgot what it was, but it was CrowdStrike. I hope I remember all this. Let me just go look at them after hours. You know who owns CrowdStrike? This is what I was going to say. You know who owns CrowdStrike is actually Nancy Pelosi. It's a cybersecurity company. And I guess it won't load here. Well, anyway, the cybersecurity is an industry that we're always going to need. Yeah, so if we go to CrowdStrike, yeah, they're up 2.75% after hours. Yeah, I do wonder if there's any specific news here. I don't know. Maybe you can find the AI news. Nope. No AI news. CrowdStrike launches multiple AI security. Acquire Pangea Cyber for $260 million. That's pretty interesting. Anyway, CrowdStrike is over half of the S&P 500 uses the CrowdStrike cybersecurity software. Nancy Pelosi owns them. They're just buy and never sell. So let's pull up Qubits. Then we'll look at Fubo. And what are you buying today? I really didn't buy anything today. Actually, I bought one share of CRMD. But yeah, basically, next time I get paid, I'm going to be loading the boat on IRM, Iron Mountain. So yeah. So let's look at D-Wave Quantum. This is a quantum stock. Hey, what up, William? Yo, remind me to look at PCH. Is that Potlatch Deltic? Or there's so many stocks. I'm like, I have a backlog of stocks we got to cover. Okay, so here's D-Wave Quantum momentum play. They're at an all-time high. I wonder if there was any specific news. Announces Qubits Japan 2025 conference amid strong growth. Okay. Anyway, I wish I'd give you more thoughts on them. They don't really have good financials or anything. So yeah, charge your phone. I know, Self. I need to charge my phone. All right. So, okay. What platform is this? Yeah. Hey, I'm on a brokerage again. If you want to get this app I'm on, it's in the link tree in my bio, the first link there. So let's look at Fubo. Okay, Fubo TV. So this is a company that honestly I don't think has much upside potential. Like they already sold to Disney. Disney owns 80% of the voting rights. Like they control it. Like Disney owns it. I think that the capped upside here is like their $5.50 level back at the Disney merger price. So I really think like you buy the stock here, you could juice it up to $5.40, but I really don't see much upside in here just because Disney owns most of the shares. My side of the bet is just own Disney. Disney also acquired a 2% stake in, what was that tune company? Did I add it to the watch list? Anyway, Disney took a stake in a company today. I don't think I added it to the watch list. I didn't. Man, it was like Pontoon. Does anyone remember what it was? It was like something like that. Anyway. All right. So let's look at Potlatch Deltic, PCH right here. So Potlatch Deltic, this is a wood play. I used to own this Timberland stock. It was a real estate company that owned a bunch of wood, like jungles basically in the not jungles but forests, and PotlatchDeltic acquired them, and so I did own some shares of this stock for a while. They have a 4.5% dividend yield. It's basically a pure wood play. Woods is 63% of their portfolio, and then timberlands, their real estate. So yeah, the business hasn't done too well right now. The revenue's down 15. You really look at the CFO for the revenue right here. So yeah, you're basically buying them for the nice yield and exposure to wood. Because I remember when wood prices spiked up in 2021, 2022, they were booming. They had great numbers. So let's see. Please do MP's financials. All right, what up, John? I got you right here. So this is MP Materials. This is a company that just got, I believe the government took a 10% stake in this company. They want to open up this rare earth mineral mine. And I kid you not, this one rare earth mineral mine that MP Materials is opening up is going to supply the US with certain specialty metals for the next 50 years. It's incredible, this mine that they're opening up. So it's going to take till like 2026, 2027 to really see that revenue. But yeah, that's why they really rallied up so much right here. The government is helping them out. And especially we're poking a lot of other countries right now with a stick with tariffs and stuff. We got to be more, independent. We got to be able to, supply our own needs before we, annoy everyone. What app is this? Yeah. Hey, Seth, what's up, dude? Yeah, by the way, that's for the YouTube chat. Yeah. Hey, I'll paste the link tree in the YouTube chat. By the way, if you're on the TikTok stream and want to get this app I'm on, you just go to the TikTok link tree in my bio. But if you're on YouTube, I pasted the link in the chat. Someone asked on YouTube. Okay, anyway. Yeah, if you want to get this app I'm on, link tree in bio, first link there. It's actually a software. It's a brokerage where you buy stocks on. So, yeah. So please do REIT. Hey, what stock? What REITs? I actually do. I own one REIT, by the way. A REIT is just a real estate investment trust, and these are taxed differently. Literally by law, 90% of these companies, all the REITs, 90% of their taxable income has to be paid out in the form of dividends. So they have abnormally high yields that are completely sustainable. They're also taxed a little differently. The dividends you receive are taxed at short-term capital gains and not long-term capital gains. So that's why I own them in my Roth IRA, because it's tax-free anyway. So bonus tip, own REITs in your Roth IRA as well as BDCs. BDCs are just like REITs where they have to pay out 90% of their taxable income in the form of a dividend. So that's how you get the sustainable 6% monthly paying dividend stock. Pretty insane. So, okay. CNR stock. Is that Canadian Natural Resource? Let me know which one you're talking about there, Roscoe. What's up? Is it Canadian National Railway or Core Natural Resources? There's a few ticker symbols there. Can we look at MU? Let's do it. This is Micron. So they're at a new all-time high. So congrats if you own this one. They deserve it as well. They're really growthy. If we go to their computer networking revenue growth, it's up 97% to a new record. So that's some nice growth. But look at this multiple. When we compare this to the industry average of like an NVIDIA, an AMD, a Broadcom, this is a pretty fair multiple. They're only trading at 28 times net income versus the industry average of 48. And, they're not trading at a low multiple because they're not as growthy. Like, they are just as growthy. The revenue's up 36% after going 81. The profits are insane. They made $2 billion in net. They're making $1 to $2 billion in net income a quarter. And at this growth rate, what's it going to be this same time next year? It used to be a tough buy. They used to lose net income every quarter. Now they're making net income every quarter. So pretty cool. Hey, Hill. Thanks. Hey, Hill Dorset. Thanks so much for all the roses there. I do appreciate that, my friend. So Core Natural Resources. Let's do it. So CNR, Core Natural Resources. So they're a commodity stock. They're a $4 billion company. Let's see, they probably have a nice yield. Well, decent, a 1% yield, but notice that payout ratio, only a 5% payout ratio. High CV thermal, metallurgical, is that a word? Maybe they made up a word. Powder River Basin. So anyway, let's just check out the total revenue right here. The revenue is up very nicely. It has doubled. It's up 125% year over year. And on that, they lost. Was that real? It was real. So somehow they lost net income on that one. They used to make like 100 mil plus. I wonder why the net income went negative. So why did the net income go negative after the sales jumped? Actually, I bet I know why. I'm glad that I'm doing this deep dive. It's actually because they most likely just did an M&A acquisition. And here's how we can tell. Their assets jumped from 2.8 to 6.2. If they did an acquisition, it would be in their cash from investing activities, and we'll go. So they sold off an asset. To raise cash. I don't know, man. That one looks a little complicated. I wish I could give you more thoughts on them. Okay. Hey, what up? Just walking around. Yeah, we're just looking at stocks here. Can we look? Tell me where MicroStrategy is going to go. Let's see. MSTR. So yeah, we'll pull up FDVV. It's half dividend, half growth. So let's see here. So this is strategy. Basically what they do. Hey, Julian, try not to spam there. Hold on. The first mute of the stream, unfortunately. Yeah, hey, try not to spam. I really do try and go quick with every stock here to get to all of them. But yeah, here's MicroStrategy. This is a basically Bitcoin proxy. And this is, you just look at the balance sheet for this stock right here. If you're wondering how did their assets go from 7 billion to 64 billion, well, that's because they've just issued a bunch of stock. Here's what they do. It's almost like a Ponzi, but it's not, or a baby. But they issue shares. They literally in one quarter diluted the shareholder by $18 billion, bought $18 billion worth of Bitcoin, and that Bitcoin is since then up 30%. Their strategy works great in a bull market. But yeah, this is basically a Bitcoin proxy. It usually just follows Bitcoin. You look at the net asset value of their Bitcoin and you compare that to the market cap, and they usually trade at a slight little premium to their Bitcoin value. But yeah, anyway. I'd low-key rather just own Bitcoin for the long run. Metallurgical, relating to the science and technology of metals. Oh, okay. Thanks for that, Looney. So let's check out this one, FDVV. So he said this is a Fidelity Core Dividend ETF. It's half dividend, half growth. So yeah, it looks very growthy. It's at an all-time high. So congrats if you own them. And you get a nice yield, a 3% dividend yield. And here are its holdings. It's NVIDIA, Microsoft, Apple, Broadcom. I noticed there's no Google or Meta here. Yeah, then they have like ExxonMobil, Bank of America, PM, Visa, some of the higher yielding names. So they're cool, like an SEHD alternative. I like them more than SEHD probably. Hey, what up? Yeah, let's look at Duolingo. Yo. Oh, someone said Dave and Buster's stock. And hey, Jumbo. Yeah, we looked at the Cheesecake Factory earlier this stream. If you want, let me know if you want me to, Jumbo. We can check them out later. We can check them out again. So here's Duolingo. It's that language learning app. If anyone's heard of Duolingo, yeah, you just like learn English on it. And basically, they're a subscription model company. I love subscription model companies because it's so predictable, the revenue. Hopefully this loads here. There we go. So yeah, if we go to where the revenue comes from, 83% comes from their subscription, and check out the growth here. It's insane. It's up 46% after going 50, Like it just hits a record every year, every quarter. So a ton of people are paying for their subscription. And if you don't pay for their subscription, you're seeing a bunch of ads. And if you go to their advertising revenue, it's up 55% year over year. So if we judge Duolingo off their financials, it looks amazing in my opinion. Revenue's up 41, net income's up 83. So that means they're expanding margins. Margins are up 30%, free cash flow's up 60. So everything about this company, in my opinion, financially is headed in the right direction. But one reason that if you're like, well, hey, the financials look good, why are they struggling? It's because they're seeing some increased competition from Google and OpenAI. They're making a language competitor app. What app is this? Yo, what up? I am Daryl. Yeah, hey, again, I'm on a brokerage right here where you buy stocks on. If you want to get this app I'm on, it's in the link tree in my bio, the very first link there. Yes, sir. So let's keep going here. You talk too fast, slow down. Hey, you know what? That is honestly probably my biggest issue. I talk too fast, so I do apologize there. By the way, if you missed anything, I am streaming on YouTube, and y'all can kind of rewind it and replay it. So yeah, so here's Slide Insurance. So first off, unfortunately, I don't think we're going to be able to see too much financial metrics because they did just IPO. But the metrics we do get, we can see that they're very growthy. Revenue's up 25, grew 41, 55. So revenue's really growthy, and they're profitable. So what are the margins on this business? 30% margins. Yeah, I actually love their financials. Yeah, they just IPO'd, so they just rose some cash. Seems like a low multiple. Are analysts expecting them to continue? The only way, I mean, I know, yeah, they're expected to keep up this same net income, so they're really trading at a low, like 7 times net income. Are the yield maxes any good? I don't think so, to be honest with you. Hey, yeah, where's, he said TAP.A. We can find that stock. Wait, you know what? This might be like a bond or something. There's like no volume on this stock right here. Yeah, I actually just own the main stock. I own TAP. Are the financials the same? Yeah, the financials are identical. So this might be a bond or something. I don't know what this is. It's the holding company. Yeah, Molson A. Yeah, I own the main shares down here. You know, I got the 13 shares of TAP right there. So let's do ticker symbol cake right here. I'll be quick about this one. Here's the Cheesecake Factory. They have a really big menu. And hey, Nacho, thanks for the roses there, Nacho. What time do you go live? Usually I stream every single day. But yeah, by the way, if y'all wanted to follow on, we stream every day. And also, I sell nothing. I have no course book, nothing like that. I usually stream while the market's open. And we've been streaming for over an hour and 30 minutes now. So here's the Cheesecake. I usually try and do 2 to 3 hour streams at least once a day, sometimes twice a day if it's Sunday or the weekend. So here's the Cheesecake Factory. This is a restaurant stock, of course. And yeah, sorry, my Wi-Fi is tweaking right now. Apparently this stuff doesn't want to load, so I do apologize. But yeah, the Cheesecake Factory is most of the revenue, 72%. They also own North Italia. It's actually been growing quite nicely for a restaurant in this environment right now. Sales are up 20 after going 15, after going 17, after going 60. Like the revenue continuously hits a record. So, or for North Italia, how's the Cheesecake Factory doing? So it's only up 0.9%. So maybe that didn't beat expectations. But good news is they're making a lot of money, profitable every single quarter. And the dividend is very nice. You get a 2% yield, 33% payout ratio. So yeah, that's the Cheesecake Factory. I would want to see some more growth of the actual Cheesecake Factory. I don't like that the sales are up just under 1% year over year. Okay, thanks, Timo. Let's see, what stock were you watching today that went up the most? I don't really know if anything went up the most. Actually, if I go to, this is my main, I guess DocuSign went up the most and PSIX. Let me just see my total watch list right here. Out of 1,000 stocks, these are the top winners. Lyft got a huge deal with Google, with Waymo. Vita Coco's doing good. I love their coconut waters. Anyone heard of? Wow, that's an all-time high on cocoa today. Dude, they make amazing coconut water. And they just got into Costco. Okay, anyway, I don't own them. It's a little tough with some of these beverage companies. Did you know that slide that I was did you look at slide that I was looking at? Yeah, hey, I did just look at that one, Michael. Yeah. We covered that one just like a minute ago when you first said it. Yes, sir. So let's see here. Someone said, what about SoFi? Yeah, let's do SoFi. They're another one of my best performance stocks. You know what? I'll show you my position in them real quick if anyone's curious. It's actually pretty insane. We've owned them for many, many years. We're up 350%, and I regret every share I've ever sold on SoFi. The shares I bought were way, way, way. I still remember it was like right before earnings. In January 2023 is when I bought all my shares. So I deserve to be up 350%. I've been absolutely diamond handing for many years. But I did sell some shares because I didn't think they'd continue to be this growthy. Check this out. This is what blew me away, and this is why they deserve to be over 25 a share. If we go to their financial services, this is insane. It just hits a record every year, every quarter. It's doubled. It's up 105 after going 80, after going 300. It's insane, these growth rates. And not just the financial services, but also the technology platform, also at a record up 15%. The lending revenue, which is half the revenue, loans revenue basically is up 31% year over year. People are just really taking SoFi serious. They're growthy. Revenue's up 42, 850 mil of revenue. Out of the 850 mil, 100 mil was after tax net income. Pretty crazy. Yeah, hey, Michael, if you just zoom back a couple minutes, you'll see the slide analysis. Yeah, I couldn't find any reason for slide being down so much. And the analysts expected them to continue that net income positivity at the same rate. So that one really just looks like a really cheaply valued insurance company. Maybe people are just selling it off because the IPO. I think they'll keep going. They're such a good company. I agree, and I'm not selling any more of my shares of SoFi ever. I'm just going to hold them. So let's see. Can we do CoreWeave? Yeah. Oh, Hill. No, we got to do this one. CCJ. What up, Hill? Thanks again for all the roses there. I do appreciate that. Is SoFi still a buy? No. I do not think SoFi is still a buy. Yeah, not at this price. Not at 27. I mean, at least the risk to reward doesn't look too good. Okay, so here's Cameco. This is my number one favorite uranium stock of all time. If you're looking for exposure to uranium, I wouldn't buy the ETF. I would pick and choose your own individual, uranium companies, and this is my number one favorite pick. You get a dividend. They're extremely profitable. The net income was a record 230 mil this quarter. It was insane. Yo, Hill Dorset, dude, no way. Thanks for the little dino there, my friend. I really do appreciate that. But yeah, Cameco, I love the profits on this one. The growth is insane. The revenue's up 47 after going 20. This is, in my opinion, the number one, the very best uranium play out there. But there is a uranium ETF, ticker symbol URA. And if you go to the URA ETF, the largest holding is literally Cameco, $22. Or if you put in $100 to this ETF, $22 of it goes to Cameco, or 23% of the whole companies or ETF. So pretty cool. Thoughts on FedEx? Yeah, FedEx is a stock there. I believe, didn't someone say reports earnings tomorrow, September 18th? Today's the 17th. Oh, and then we can look at Oscar Health. Oh, and Pfizer too. Pfizer looks pretty interesting. Sustainable yield. But yeah, here's FedEx right here. They're a better buy than UPS for sure. Their net income isn't being gobbled up by the dividend. FedEx is a significantly better buy than UPS. Not financial advice, but significantly better. They have a 2.5% dividend yield. Let me see their financials right here. They're trading at 13 times net income. That's, pretty fair because they just sell a commodity. Average revenue per parcel is up year over year, so they rose prices actually. But the daily volume did fall a little bit. Let me just see. Yeah, so not a very growthy business. Probably, this stock will not outperform the S&P 500 in the long run, but here's why. The revenue is only up by 0.5, not great. Doesn't even beat inflation. And the net income, the net income's up by 11. So yeah, they were able to raise prices. That was really impressive. They were able to raise their prices. Okay, anyway, yeah, they're making easily, if you average it out here, they're making over $1 billion of net income every quarter. Safe and sustainable dividend. It's not UPS where legit 100%, over 100% of their net income is being eaten up by the dividend. So here's actually another company with a really high yield. And here's honestly how you can tell for yourself if a company has a safe and sustainable dividend. Because if you look at Pfizer right here, we can see they have a 7% dividend and the payout ratio is 120. Is that 120% payout ratio, is that real? Well, here's how we can find out. So here's what we do. We look at the most recent quarter of net income and they made $2.93 billion of net income this quarter. So $2.93 billion, and the dividend cost $2.45 billion. So they actually were able to afford the dividend. They just need to keep that up. They need to make over $2.4 billion in net income a quarter. And honestly, they need to make quite a bit more than that to actually retain some of the money. Because if they just make $2.5 billion, yeah, they made $2.5 billion, but they had no leftover money to, all of it got paid out to the dividend. So we really want to see them stay around this $3 billion in net income a quarter. And here's how we can see if analysts expect that. So $3 billion in net income is the same as 51 cents of EPS. And analysts are expecting them to, stay at this 51 cent of EPS. So yeah, they have around a 75% dividend yield. They own some random stuff like Pfizer. They own like Viagra and stuff like that. So anyway, the COVID vaccine was a huge revenue driver for them, but that's gone now, of course. So that's why the stock hasn't been doing too well. But yeah, anyway, if you had $4,000, what would you put it into? Well, first off, if I had a lot of money, I would just put the majority of it into the S&P 500. So I'd put in the S&P 500, and then I'd play around with some individual companies like an Amazon or something. Stock you use and love, Google, Meta. What app is this? Yo, what up, Fayo? Yeah, by the way, if you want to get this app I'm on, it's a little brokerage. It's where you buy stocks on. It's in the link tree in my bio, the very first link there. I love it. So let's look at Oscar Health. This is a really growthy company. They're one of the Medicare, Medicaid stocks. And, there's a lot of headwinds for that industry. And hey, Ran, my friend, thanks so much for the gift there. I do appreciate that, Rose. So here's what I love about Oscar Health is how growthy they are. Like in 2020 for the full year, the revenue was 590 mil. Now it's 9.2 billion. That's incredible annual growth of the sales. And if we just look at it quarterly, it's up 39 or 29% year over year after going 45, after going 43, after going 160. So the growth on the sales is good, but they're still not net income positive. They're still struggling with net income positivity. Like they made net income last quarter, but then they lost a bunch this quarter. So yeah, it's still revenue-less. They're still seeing the headwinds from the government regulation of the Medicaid stocks, but yeah. Careful with Pfizer next couple of days. They have the vaccine advisory board meeting on infants. Oh yeah, William, I heard about that. Unfortunately, yeah, William. Like there were like 25 kids or something that unfortunately passed away from taking it's either the Pfizer or one of the other COVID vaccines. And so there's a huge thing on that. Yeah, you know what? Thanks for bringing that up. I had completely forgot about that. Okay, so do you do options? I actually don't do options. I haven't bought an option I haven't done a single option in over a year. So yeah, I mainly really I have a really boring strategy that shouldn't get views. And my my portfolio updates on YouTube don't get many views. But yeah, I legit just do the most boring thing. But it works so well. Just buy and hold great companies for the long run and don't sell out of them once you're up on them. That's my biggest regret. Selling great companies, just to hold on to them. Why trade it for cash? Just hold it on forever. Like Meta, McDonald's, Google, United Rentals, Constellation Energy. So yeah, and like these other companies, well, I regret every share I've ever sold of SoFi and Robinhood. Dude, I'm up 700% on Robinhood. I kick myself in the nuts for selling 50 shares at a much lower price than it is today. At least I still have some, but yeah. Sometimes it is good to sell a stock if they have bad financials. Like this is a stock I would recommend selling. So this is a company I feel bad if you own this stock. Yeah, what up, Mark? We'll look at Webull. Ooh, and what up, Rand? Yo, Rand, thanks again for the rose. We'll check out Glue stock after this. But yeah, Wolfspeed's a company I would completely avoid. Sell it, just don't touch it. Maybe swing trade it, but don't trust this one to buy and hold forever. Here's why. I'll just show you the numbers for yourself. You can draw your own conclusion. Of course, I'm not an expert. I sell nothing. But look in the top right. You see this market cap? They're only worth $420 million. Okay, think about that in the back of your head. You can basically buy this whole entire company for $420 million. And here's what you're buying. You're buying a company that lost $670 million in net income this quarter. 300 mil last quarter, 400 mil the previous quarter. Like this has real bankruptcy risk. Like they basically are bankrupt right now in my eyes, and that's why the stock's at an all-time low. So I could not. They now have more liabilities than they have assets. I mean, everything for Wolf is headed in the wrong direction. Like all that, these huge $600 million net income loss, all for a business that declined. Like that's so sad. So be really careful. Like it's kind of like Lucid too. Like there's some stocks that even though they're at an all-time low, you still don't buy them, even though they're at an all-time low. Like just avoid them. And hey, Rand, thanks again for the gifts there. Someone said I'm talking too fast. Calm down. Oh, my bad. Hey, so here's ticker symbol Glue. We got to get through all the stocks, We got to only spend a minute each on each stock. So here's ticker symbol Glue. This is Monte Rosa Therapeutics. They're only worth 390 mil. So do beware, extremely small market cap. They're pretty much at an all-time low. Do they have sales yet? They do. Okay, let me see. Yeah, so the revenue went from 4 mil to 23 million year over year. That's an insane increase. So they must have just got FDA approval. Yeah, these net income losses year over year are great. They're losing less and less money than they were. So I'm actually curious to see what will happen with the growth. Like they just started selling their products. So at this growth rate, what's it going to be this time next year? They're beating, the orange lines what the analysts expected. They only expected 7 mil. They did 23 mil. And they're beating on every metric. Actually, Glue is really cool. Developing a portfolio of novel and proprietary molecular glue degraders. Wait, so this isn't a healthcare company. This is a company that sells proprietary molecule glue degraders, or MGDs. Pretty cool and pretty niche, actually. I'll put them on the watch list. I like finding niche companies like this. And I like the fact that, the sales are super growthy. It was just 1 million. Now it's crazy good. And wait, they made 50 mil in net income. They made 50 mil in net income last quarter. Was that real? It was real. Yo, Glue is really cool, actually. Thank you for that one. I should give you a rose, Mr. Ran. Thank you. And Not Magic, dude, thanks for the lightning bolt there. No way. Yo, shout out to the homie Mark on the YouTube stream with the 299 euro super chat. Yo, Mark, thank you so much, my friend. Yo, by the way, the best way to support me is check out the YouTube stream. I'm trying to build on my YouTube channel. I don't get many viewers on there. So if you want to help me out, best way to support me is just watch the stream from YouTube. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. But yeah, just type in YouTube Nathan Robert. I'm streaming on there. And if you missed anything, you can replay it or something. But here's Webull. This is a brokerage. Is this an app? Hey, more. I'm on a brokerage right now. If you want to get this app that I'm on right now, it's where you buy stocks. It's in the link tree in my bio, the first link there. So I'm on this brokerage, and I also have this other app where you buy stocks on. I wouldn't get this app. I'd rather get this one. But this app right here, Webull, as you can see at the very top, this one's called Webull. This is their app publicly traded, ticker symbol Bull. So here is their app publicly traded, and they just IPO'd, and I like how growthy they are. The revenue is up 46% year over year. Unfortunately, they are still losing money, or they lost money this quarter, but made net income the past 2 quarters. I really think this one's going to eventually turn into like a Robinhood. We still got to wait. But they just introduced crypto assets back to this app. So you can now buy crypto on Webull again. And I think that's going to be a huge earnings tailwind for Webull. So yeah, I do like this one, but I'd be very careful, like very careful. I wouldn't make it a meaningful size position. Like I'd maybe put like 1% of the portfolio in there. The better version of them is, of course, Robinhood stock, ticker symbol Hood. And I've looked at Webull before. I actually chose to buy FUTU stock over Webull. They do the exact same thing Webull and Robinhood does. They're just another brokerage. And they have incredible margins. You won't believe it. Like if we go to the net margins right here, they have 50% margins. So let's see here. Hey, thanks again, Mark, for the €2.99. I really do appreciate that, Mark. Hope you're having a great Wednesday. So here's another company, H&ST. Yo, I'm going to give you my honest thoughts on Honest. So yeah, this is the Honest company, and I'll say this. I really wouldn't buy this one. Truthfully, like here's the thing. If you look in the top right, they're a $440 million company. So that's an extremely tiny market cap, only $440 million. But here's kind of the disappointing part is the fact that they're not really growing. You know, if we look at the revenue only grew by 0.4% year over year. That's not great. That doesn't really beat inflation. We want to see the growth start to come back, but revenue is only up by 0.4. I do like that they're net income positive. They made 4 mil, 3 mil. You know, it's pretty significant when your whole company's only worth 400 mil. Making 3 mil a quarter is actually pretty significant. So yeah, that's my honest thoughts on the Honest company. They legit just sell a commodity. 90% of their sales are actually, I wonder if I can zoom out and find this. Yeah, 55% of the revenue are diapers and wipes. Then they have like skin and personal care. Anyway, I want to see the growth come back. I like the fact that they basically have no net debt. Hey, Eric, what up, Eric? He said BMNR. I got one for you. Wait, this is Bitmine Interversions. This is just a crypto play. So if you look at the price of Ethereum, this is basically the same thing. Yeah, if you look at the very top here, BMNR hoards 2.15 million Ethereum. Wow, they own 2 million Ethereum. Wait, what's the price of Ethereum? Well, anyway, yeah, it's a $9.9 billion company. It's basically an Ethereum staking company. If you're wondering where does this company's revenue come from? Well, revenue from self-mining from their crypto mining assets. It's basically a crypto play. It really just should trade and follow Ethereum. They're the Ethereum version of MicroStrategy. So yeah, why do people share how they make money? Surely you don't want to keep the source low so it doesn't get rinsed. Well, hey, I'm not really sharing any secrets here. I think, everyone should know about investing, and actually, if you share people your secrets, hey, and this really, I'm really wording this bad. Like, hey, buy Apple. It helps you because you're a shareholder, but you're not. It really helps everyone else more than you. So by me talking about stocks, I'm really helping a lot more other people in their shares more than mine. But anyway, yeah, honestly, the best strategy, not financial advice, to preserve and build wealth is to just buy great, high quality companies and just hold it on for the long run, like Amazon, Google, Meta, great stocks. So what up, kid? He said, can we look at BE stock? Ooh, Sprout Market. Hey, you're talking about Sprouts Farmers Market? Yeah, I love that stock. I own. Kramer said to stay away on BMNR before July. It was below $4. Hey, Jim Kramer. Actually, the reason the stock initially rallied is because Tom Lee started working for the board. It's pretty interesting. But yeah, here's Bloom Energy. Wow, they're up 9% today, on a day that's pretty bare. I mean, with the Fed meeting, the market was slightly red. But yeah, Bloom Energy looks like the revenue's up 20% year over year. The net income losses are narrowing. Yeah, that's actually great news. Yeah, my phone does need charging. Geez, we're on 12%. All right. Yeah. Look at this one quarter, though. They made 105 mil in net income. That's really interesting to me. That was a great margin quarter. So actually, analysts are expecting the revenue to continue to rise, 609 mil. So I'd be careful with that one. It looks super momentum-y right now. But the financials are headed in the right direction. Just looks overvalued. To the opposite, inverse Kramer ETF. There used to be an inverse Kramer ETF, then it got delisted. And DG, how's it going, man? He says, what do you think of airline stocks? And if I had to pick an airline, like I had to, I'd pick DAL. and I would never own DAL. Like I just don't want to own the airlines are an industry you don't really want. Like I know certain people in certain funds, like they literally replicate the S&P 500 without the airlines and the cruise lines, and they do great. So like when you go into a recession, they burn through money. They lose significant amount of money. Thankfully now they're making net. Look at this. They're making net income every quarter. That's great news for Delta Airlines. But if we go back to COVID, wow, they lost $5 billion that one quarter. So anyway, this out of all the airlines, Delta Airlines is the best, most well-run one out there. But even then, I still wouldn't buy this stock. They're like a trade. You get a 1% yield, low valuation, but yeah, I just don't like the airlines. They just don't outperform the S&P in the long run. Hey, Aaron, what up? He said, FIX stock, airline stocks crash hard. I see what you did there. So yeah, Comfort Systems. I'll be quick about this one because I really wouldn't recommend this stock at their current price. And hey, what up? Hello from the Woodlands, dude. Thanks for all the roses there, the gifts. I really do appreciate that. Can we look at Wolf? Oh no, not Wolf stock. Yo, I don't have anything good to say. If I look at Wolf stock, I might scare you out of it. So you know what? We'll look at that one next because I appreciate all the roses you left me. I'll give you I'll warn people about that stock. But anyway, here's Comfort Systems. This stock is at an all-time high. They deserve to be at all-time highs. They're a boring business. Their mechanical revenue is up 12% year over year, and their electrical segment is up 50% year over year. So pretty growthy. But the real winner for Comfort Systems is their margin expansion. So if you look at the revenue's up 20, but the net income is up 72. So that means pricing power. The net margin went from 7.4 to 10.7. Insane. A 43% net margin expansion that does wonders for the EPS. They do buybacks. They have no debt. They're beating on every analyst expectation. They're acquiring businesses. They grow their dividend quarterly. Like you don't see many companies doing that. The dividend was 50 cents, 45, 40, 35, 30. Like every quarter they raise it. It's insane. And they have such a low payout ratio. So that's why I haven't sold a single share ever of Comfort Systems. They're my largest holding by far. It's undiversifying me, but I'm okay with that. Okay, yeah, well, hello from Woodlands. What's up? Hello, my friend. And hey, thanks again, Hill Dorset, as well, for all the roses, dude. I really appreciate that. So, Oracle stock too. So here is Open Door Technologies. Yeah, we'll look at Okta. We'll look at Okta after this. So here's Open Door Technologies. This one is a huge momentum company, and they're really begging for a low interest rate environment. So it's a super interest rate sensitive company. What do? They're just a real estate company. They just flip houses. And if we go back to 2021, when the interest rates were zero, they did insane. Like these growth rates were nuts. They were growing. They did $4 to $5 billion in revenue a quarter. But look what happened shortly after as rates hiked up. The revenue went from $4 to $5 billion to under $1 billion, a 70% decline, super interest rate sensitive. So that's why the stock has been momentuming, because interest rates just got cut today and they were kind of pricing that in before today. And the CEO just quit. I wouldn't touch that one, to be honest with you. It's all momentum, but yeah. What are you using to look at stocks? Oh yeah, by the way, if you want to get this app, it's where you buy stocks on. It's in the link tree in my bio, the very first link there. It's a brokerage. It's my favorite app to that's where I keep my stocks. And I keep my idle cash in here as well because it earns the nice little daily interest. So if you want to get this app, I'm on it. It's a brokerage. It's in the link tree in my bio, first link there. It's an affiliate link too, full disclosure. So let's see, Okta stock. Yeah, this is a software company. At my college, we actually use the Okta software. It runs the whole digital learning platform. But Okta, again, hey, by the way, I'm not an expert. I'm just a college student. But yeah, Okta, this one has not done too well. The stock reminds me of a DocuSign, a PayPal, a Peloton. You haven't done too well recently. And it's odd because here's the really weird part. Okta's financials are at their all-time high best. Here's the thing. They're the most profitable they've ever been. The revenue is up 12. And look at this net income. They're actually making net income every quarter. If we zoom out, they used to lose net income every quarter, and they were slowly trending toward profitability. And now they're finally at profitability. They also have an insanely good balance sheet, no net debt, deleveraging, $3 billion of cash, making net income every quarter now. What about the FCF? How's the free cash flow? Yeah, look at these free cash flow numbers. Free cash flow is up 100% year over year. Okta, I really like them. They better be doing share buybacks right now, like PayPal is. I really do like Okta. Check out APA. So this is a Apache or Apache. Let's check it out. So an $8.9 billion company. The stock is actually, that's not too good. Look at this. The stock is the same price that it was back in the year 2000. So the stock honestly hasn't done too well. What do they sell though? Explorers. Let me go to this on an annual basis. Yeah, Explorers for develops natural gas and stuff. So the revenue actually should be doing ooh. So the revenue's down by 14. So they did lose their growth. The revenue's negative by 15. But ooh, and then actually, this is why you don't always look at net income. It says it's up 7%, but you look at the operating profit, it actually is down by 24, which aligns with the sales decline. But still, they're making basically 800 million of after-tax net income a quarter. You get a 4% yield here. It just looks like a typical oil and gas play. But again, it's the same price that it was back in the year 2000. These don't really outperform in the long run. I would be careful. I'd probably rather just go with another oil or natural gas play like a WMB, a Williams, Again, these don't really outperform in the long run, but I love this one right here. You get a 3.3% yield. Anyway, Polaris stock, PII. Is it Polaris like a car company? So yeah, if we go to Polaris right here, they own, some kind of vehicle. Okay, yeah, Polaris. Do they make? It's like some kind of mini car. I don't know. But anyway, yeah, off-road. Yeah, these like little three-wheeler off-road things. I've seen them before. So yeah, that business just isn't doing too well, unfortunately. If we go to revenue's down 5% after falling 12, after falling 4. Like they've just been in decline for like many years. And not just the revenue declining, but this is the worst news of all. They used to make 100 to 200 million in net income a quarter. Pretty good buy. But now the net income's negative. Oh, yeah, the slingshot. Yeah, that's what it's called. Yeah, the Polaris slingshot or Polestar. Well, I don't know. Anyway, the net income went negative. I can totally understand why the stock is done so bad because the financials aren't doing too well. They lost the growth, revenue's negative, and net income now is negative. They're losing money, so I'd be super careful. Let's look at NEO. Hey, what up, Hill? Yeah, I don't love NEO. They're a Chinese ADR, so you do pay the ADR fee. But yeah, they're up 52% in 30 days. Here's why I'd still stay away from this stock. First off, congrats if you own this company. Not financial advice. Not financial advice. I'm not telling you what to do, but I would take profits if I held shares. I would sell most of my position. But here's the thing. And they could continue to go higher. Like I know they might be momentuming so much because Tesla is, but here's the thing. They're a $16 billion company. Remember that market cap. They're worth $16 billion and they're losing, 700 mil, 900 mil, 900 mil, 700 mil. Like they're burning through so much money and they've just done that for all of time. Like they really need to trend closer towards profitability and the losses are actually worsening with, 900 mil, almost a bill. Luckily, the sales are up 10%. Not too shabby. I wonder why they're rallying so much recently. I wonder if we can find news here. Neos receives 100,000 pre-orders for their new SUV. Pretty cool. China NEV market, China NEV tax credit. Well, anyway, yeah, they're an ADR. You do pay the China ADR fee, but okay, new vehicle. Okay, that must be what it is, Hill. Pretty cool. Yeah, that could bring a lot of growth. But one thing I'd really want to see is them to narrow those losses. Here's a pretty cool stock. This is Salesforce. They own some great assets. Like they own Slack, for example. And they also introduced like Agentforce recently. So Salesforce, unfortunately, hasn't been doing too well. They're the same price as they were back in the year 2020. It's really just a lot of software names. You look at Adobe, Salesforce, like they just haven't been doing too well. These sales companies or service companies really always trade at high multiples. Like they're trading at 35 times net income. It's finally back to reality. Like it's worth probably buying at this price. I wouldn't probably have Salesforce as a huge position. Like there is like a bit of a fear of AI hurting them and not actually benefiting them, which used to be seen as an AI beneficiary, but not real much anymore. I mean, here's what I love. The actual financials look good. Look at how diversified that they are. They're in services, sales, platform and other, Slack, integration, analytics, marketing, commerce. I love how diversified that they are. I love the growth. The revenue is up 9.7 and the net income is up by 32. So they're actually able to grow their margins, record 18% margin. So I love that they're profitable, making 1.7, 1.8 bill a quarter. They're doing buybacks. You also get a dividend now, 0.7% yield. So Salesforce is pretty cool. but I do wonder how the service companies will do. So how about Coal Corporation? Are you talking about Coles? Um, like the mall stock? Let me know. Hey, what up, Amisha? Give me the ticker symbol. I'm up 40% on APA. I think we're going to sell soon. Hey, nice, they're in. So can we look at PSD, please? What is PSD? This is, let me know which one you're talking about. Are you talking about this Canadian company, Pulse Science? Yeah, let me know if you're talking about that one, Pulse Science, and we'll check it out. So we'll look at a few more companies here. Then actually, I've been streaming for over 2 hours and my head hurts a little. So we'll look at a few more stocks here. By the way, if you want to hit the follow button, we stream every day. We'll be streaming tomorrow, looking at stocks too. Let's look at CoreWeave right here. Oh, actually, he said, yeah, let's look at PSD real quick. So then we can pull up CoreWeave. And some other ones. So here's Pulse Seismic. So a very small one. They're only worth $170 million. So do beware, very small company. The stock has done fairly well though. So we're going to convert the revenue from Canadian to USD just so we can get a better picture of what they do. What industry are they in? They're in the oil and gas industry. Okay. So do beware, they're an oil and gas company. The revenue is 13 mil. So that's actually why the whole company is worth 100 mil, just because the revenue isn't much. But whoa, they have like weirdly high margins. Like, wow, 7 mil, 9 mil of net income. They did 13 mil of revenue. Out of that, 7 mil was net income. That's a 52% net margin for an oil and gas company. Man, if they can scale up and keep growing their sales and at this margin, that's pretty insane. And you get a 1.8% dividend yield. So there's your Canadian oil and gas play. Yeah. Do you buy options? I actually don't really do any options right now. I haven't done any options in over a year. So let's look at CoreWeave. What up, Brandon? Yeah, if we go to CoreWeave is in the NVIDIA portfolio. As you know, these are a bunch of super investors. By SEC law, they have to make all their trades public by SEC. So we can see legit their exact holdings and their exact weightings. Like her largest holding is Apple, then Amazon, Google. A lot of super investors like Warren Buffett, his largest holding is Apple. Nancy Pelosi, largest holding is Apple. The Trump portfolio, his second largest holding is Apple. Apple's like a really popular stock. But anyway, switching gears a little bit, let's go to the NVIDIA portfolio because NVIDIA owns a bunch of, publicly traded stocks. And one of them is CoreWeave. CoreWeave is, they just bought a bunch of they just bought a bunch of GPUs from NVIDIA. And basically NVIDIA somehow agreed to buy their excess capacity or like rent back excess capacity, which is pretty insane. So CoreWeave got a great deal there. Let's see here. CoreWeave signed $6.3 billion cloud computing deal with NVIDIA and announces UK expansion. Anyway, one thing I love about CoreWeave is how growthy they are. Of course, they're owned by NVIDIA, but the financials I like. So check this out. The revenue went from $395 to $1.2 billion. That's a 3x increase. So the revenue is growing nicely. But one thing I don't like, and that kind of scares me, is these huge losses. And it's not like these are unexpected. Analysts expect these losses and are expected to continue to lose a couple $100 million a quarter for the next couple quarters. So this is nothing new to the analyst. And also according to the analyst, the revenue is expected to continue to climb up to a new record. Like it was already a record this quarter. 1.2 billion was a record. It's expected to continue to climb up to 1.8 billion. So CoreWeave is a really growthy company owned by NVIDIA. I do think they're overvalued here. I would be careful about that. But yeah. Anyway, I hope you guys have a great rest of your Wednesday. Again, if you want to hit the follow button, we'll be streaming tomorrow. We stream every single day. I sell nothing. I have no course, book, WhatsApp. I'll never DM you or follow you. So please watch out for people impersonating me. If you do hit the follow button, you might get followed by someone impersonating me. So watch out for that. But yeah, the number one way to support me though, if you do want to support me, for everyone on the TikTok stream, the best way to support me is check out my YouTube channel. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. I'm trying to build on my YouTube stream and my YouTube channel. It doesn't really get many views. So yeah, my YouTube channel is called Nathan Robert. I just made a video about a new high dividend yielding stock that I bought. I bought a new stock with a 3.3% dividend yield here in my Roth IRA. If anyone wants to see why I bought, ticker symbol IRM, actually I'll give you a quick pitch for this stock. 3.3% dividend yield, 61% payout ratio, 95% of the S&P 500 are customers. In the S&P 500, go check out my most recent YouTube video if you want to see more about why I bought IRM. Hey, thanks, Eric. Thanks, big mans. Hope everyone has a great... I'm going to be scared when you start. Hey, hopefully never, Eric, So yeah, anyway, hope you guys have a great rest of Wednesday. See you later. Again, best way to support me is just subscribe to my YouTube channel. It's called Nathan Robert, Linktree in bio. I'm streaming on there. So if you missed anything and want to replay it, a lot of people like to replay the streams. It's on my YouTube channel, Nathan Robert. See you later. We'll be streaming tomorrow. Boom. And thanks you to everyone on the YouTube stream. See ya, Michael. See ya, Aaron. See ya, Celebrate. Ken, N, Amisha, Looney. Shout out to all the members.